prices are still running very hot. Core services in the CPI were up 0.5, which was down from much higher in January, but that's still nowhere near where the Fed would like to see.
Well, so then are you surprised by the lack of reaction in markets? And I'm talking about stocks, yes, but I'm also talking about your world. In bond markets, yes, yields went up, but not that much.
Yeah, I mean, I think it's partly a function of where we are. I mean, a couple months ago, we had as much as 170 basis points of easing priced in for the year. We got almost all the way down to the dots. We were in the high 70s at one point a week or two ago. And at the beginning of the week, we were, between 90 and 100, so a little more dovish than the markets. Now we're back into the 80s, so, I don't think that the adjustment needed to be as large as it needed to be a couple of months ago.
Does it mean that also this market needs to get its head around the idea of truly higher rates for longer? We were talking about this with Bill Dudley, the idea that neutral rates might be significantly higher than they were in the past, and that will reset a lot of expectations. How much do you agree with that and kind of lean in with the idea that maybe we're not all that restrictive?
Yeah, I mean, I do think policy is restrictive, but I would say it feels like the neutral rate is considerably higher than it was before the pandemic. My guess is it's probably in the low threes, somewhere between 3 and 3.5. The Fed is still saying 2.5 officially, but when they're pressed on it, pretty much every official is saying, yeah, it's probably higher. We just, I just don't think they've engaged on that yet. It doesn't make a big difference for them right now because the policy rate's above 5, so who cares if neutral is 2.5 or 3? But eventually they're going to have to come to that and make a much more settled decision.
It kind of makes a difference if it's proven that part of the disinflationary trends that we've seen over the last 6 months had nothing to do with them, and that ultimately that monetary policy has been irrelevant regarding what we've seen play out over the last 6 months in the data.
Well, you'll never hear anyone at the Fed say that.
But would you say that?
No, I don't. I do think that the economy is on a cooling path, but it's a very gradual path. There have been a lot of tailwinds for the economy, fiscal policy, and a number of other things that have helped to continue with strength.
Let's take goods disinflation of 6 months ago. How much of that was about the Federal Reserve? Wasn't that just a supply-side story?
I think that's predominantly supply-side, yeah.
And now goods inflation is starting to pick up again. Core goods. Should they be worried about that?
I think that was probably, I wouldn't be too worried about that. I think goods inflation, core goods inflation is probably going to settle out around flat, which is where it was running before the pandemic. But again, I mean, the services piece is the piece that they've focused on. It's the piece that really matters for the underlying inflation rate. And maybe they've gotten a little bit of progress there, but certainly not nearly enough.
A lot of guests have come on surveillance and talked about it's all about housing and that people are looking to that sphere, especially because arguably the Fed does have greater influence over that market. We're seeing mortgage rates come down just a touch and people flood back into the market. Does that tell you what financial conditions easing does in terms of just basically giving ammunition to an already pretty hot economy?
Yeah, there's no doubt that housing demand is very sensitive to mortgage rates. I mean, we've seen every time mortgage rates have dipped, housing demand has picked up at least at the margin, and every time that mortgage rates rise, it falls off. The problem is on the other side of the equation, on the supply side of the equation, because you've got all these homeowners sitting on their 3 and 4% mortgages, and when the mortgage rate goes from 7 to 6.5, it's not going to encourage those folks to move. They're kind of locked in with those low borrowing costs. And so you can move the needle on the demand side, but if you can't move the needle on the supply side, the market remains tight, which is why home prices have been rising and why, at least part of the reason why I think we've seen on the shelter cost piece that it's proven more stubborn than people anticipated.
You talked about the tailwinds for fiscal, and a lot of guests have come on and talked about that. But some trackers at Brookings, for instance, say fiscal policy has only basically helped growth 0.2 percentage points. Do you see it as a bigger component?
I don't know if it's a huge component now. I mean, I think it was unprecedentedly important during and just after the pandemic, right? Because the government distributed just immense amounts of cash, trillions of dollars of cash to businesses and households. I think from a household perspective, we're kind of back to normal on that front. I think households have either spent down or seen the purchasing power of that money eroded by inflation. But households and businesses are still in very good shape from a balance sheet perspective, which means that they don't have as large a need to borrow. And so the sensitivity of the economy to higher rates is not as intense as it might otherwise be.
Let's finish on looking ahead to next week. Chairman Powell news conference statement summary of economic projections as well. I know based on your note that you think that he's made some communication errors over the last few months. When he says a little bit more evidence, do you know what that means and what the kind of errors that you're talking about? What are they?
Yeah, so I think he was too dovish in December. And I have to say, I think he was probably too dovish again last week when he said they were not far, right? Because that was out of step with what almost everybody else in the committee had been saying over the prior month. It's interesting because in January, when he said we need greater confidence, he made it seem like it was just, oh, we probably need 1 or 2 more good inflation readings.
Yeah.
Of course, we've gotten 2 bad ones since then. But then other Fed officials came out, you got the same message from the minutes, that it wasn't as simple as just that. It was more about the composition, which is something that I've been talking about. You've gotten improvement, as we've discussed, on the goods side, and it's really been a handful of categories, but the services numbers are not showing progress, and that's what a lot of Fed officials have said. They need to see a disbursement of the moderation.
Can I finish on this then? Is he a bad communicator or just really dovish?
That's a good question. I don't know the answer to that. I will say, I think in the context of last week, you have to remember the audience. You know, he's talking in front of Congress. He doesn't want to antagonize, so he's kind of throwing that carrot out there of, hey, we might lower rates soon.
Stop writing me letters.
But, you know, we'll see what he has to say. Next week, the audience is the financial markets,
That's right.
and so we'll see what he has to say.
Stephen enjoyed this. Stephen Stanley of Santander, his call sort of standing the test of time so far in 2024, looking for 50 basis points of cuts, and those cuts won't come until after the election. Equities right now on the S&P turning slightly negative going into the opening bell. Let's get you some stories elsewhere this morning. Here is your Bloomberg Brief with Yahara Hackers. Hey, Yahara.
Hi, John. Shares of Dollar Tree are lower in the pre-market after the company's first quarter earnings guidance missed estimates. Fourth quarter sales and earnings also came in short. Plus, the company expects to shut about 600 Family Dollar stores in the first half of fiscal 2024. The Dollar Tree CEO said he hopes favorable freight rates ease pressure on the company later this year. Shell is cutting at least 20% of jobs in its deals team as the company restructures to reduce costs. The cuts are expected to be announced in April, according to Bloomberg reporting. The division has several hundred employees handling mergers and acquisitions for Shell. The oil giant has already made similar moves across other units of its business, including low-carbon solutions, chemicals, and IT. Citadel founder Ken Griffin says the Fed should move more slowly in lowering rates so they don't have to reverse course later. Speaking at the Futures Industry Association conference, Griffin said, quote, pausing and then changing direction back toward higher rates quickly would be the most devastating course of action to pursue. He thinks the Fed will be slower than people are expecting for that very reason. The Fed's next policy decision is due out next Wednesday. That's your Bloomberg Brief. John?
Hey, Yahara, thank you. Thank you very much. Up next on the program, last call for TikTok.
The track record with TikTok's malign conduct is very clear at this point. This is about the malign conduct that an entity that is beholden to the CCP has been engaged in.
That conversation up next. This is Bloomberg.
The top names in tech are on Bloomberg.
There's a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices. They all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to provide great index products and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything.
You never hear people people saying, I want my little boy to grow up to be an insurance person. Did your parents tell you to be in the insurance world?
I really liked the insurance sector at the time. We are basically promoting and ensuring social cohesion. And at the time, I wanted to make a difference and wanted to go in there.
This is Bloomberg.
Equities just about unchanged on the S&P 500. Opening bell, let's call it 40 minutes away. Equities going absolutely nowhere in the bond market. Yields higher by 3 basis points, 418.20 on a 10-year. In foreign exchange, dollar slightly weaker, euro stronger, 109.39. That currency pair positive by 0.1%. And crude getting closer to $80 a barrel on WTI, 79.18, up by 2%. Under surveillance this morning, last call for TikTok.
The track record with TikTok's malign conduct is very clear at this point. Everything is seen inside of China based on leaked materials. Personnel in Beijing are still getting access to that data, sensitive U.S. user data, after agreeing to wall it off. This is about the malign conduct that an entity that is beholden to the CCP has been engaged in.
Here's the latest. The House preparing to vote in just over an hour on a bill that would force TikTok's Chinese parent company to sell the app or face a ban in the United States. Bloomberg's Ed Ludlow of Bloomberg Technology joins us now for more. Ed, from your side of the table, from your perspective, are you thinking about suitors yet for this particular app, or is that too soon?
Everyone's making the kind of assumption that it's a foregone conclusion. You know, I'll leave the politics to AMH, but if this goes through in the House, there is a concern in the Senate, right, that this, on the other side of the table, allows whichever sitting president we have some overreach, some over-censorship beyond the aims of de-risking TikTok's relationship with China. But you guys showed the statement from TikTok earlier in your program, right? For them, it seems to be a foregone conclusion as well. The ban in the US will be effective, and the only way that they can move forward is to find a buyer. I'd really end my thought, John, on that. Look at the actions of the Biden administration in the antitrust context and ask which of the mega cap tech companies in this country would be realistically allowed to buy TikTok, and then, you know, whittle the list down from there.
I have to think, though, Ed, I mean, a year ago, I was talking about what CFIUS told TikTok, which is sell your shares or potentially face a ban. Even if the Senate slows it down, the direction of travel is that TikTok, for the most part, is not welcomed in the United States in a bipartisan fashion.
Well, so, on that sense, though, in your interview with FCC Commissioner Carr, he made it really simple, black and white. All you need to do is sever the tie or cut the link, I think he said, to China. He even said that it doesn't matter if the buyer is a non-US entity, as long as it's not China. You know, that makes it seem very straightforward, but I don't know that that's the case.
I am wondering, Ed, about the confusion around what exactly the U.S. wants to do is coming to the fore, too. Because when we were speaking with the FCC commissioner, he was talking about algorithms as though that was separate from content. Do we have a sense of what the problem is in terms of how they're going to remedy it, whether it's not a sale, whether it's not a ban?
Well, you also discussed with him Project Texas, right? The housing of US user data in Oracle-owned and operated data centers in this country, which means that on paper, Project Texas would block any visibility of the Chinese government or any Chinese ByteDance, the parent company of TikTok staff, from seeing the data. But in the opinion of FCC Commissioner Carr, that has not been effective. You know, he cites reports about leaked documents showing that there was still some accessibility on the China side. The thing about this is, like, there are 170 million Americans that use TikTok. President Biden has been using TikTok as part of his campaign. And so, you know, our reporting suggests that a sale is what is going to be pushed for in the first instance. TikTok sees it as a last resort. But we're talking about this or framing it as an outright ban of the platform in the country.
Yeah.
And that is the feasibility question I'd raise.
Just before you go, I want to talk about the former president, Donald Trump. Most people we've spoken to this morning think he won't be successful in his attempt to blow this up. But you can see, based on his communication, that he seems to consider Meta a much, much bigger issue. And I'm trying to work out, Ed, what that might mean for Mark Zuckerberg and the company if he gets a second term.
Yeah, I mean, he's sort of flip-flopped. You will have seen some of the upside in Meta shares of late as that narrative's built out. Also look at shares like Rumble, the conservative social media platform. I think they jumped 18% yesterday on a report. They were considering buying the TikTok US operations. But it's highly analogous, right? The Meta Instagram platform and TikTok, to all intents and purposes, they're short-form vertical video. And this change of position from Trump is very interesting. You know, I guess that he's positioning that TikTok remaining in this country is the lesser of two evils to his mind. And he's highly influential, although he's not on those platforms, right? He's on Truth Social. So that's why when I'm preparing for my show later today, those are the stocks that I'll watch in the immediate term.
Hey, Ed, great to catch up. Looking forward to the programme a little bit later, 11 a.m. Eastern Time, a few hours away. Ed Ludlow, Caroline Hyde on Bloomberg Technology. A few things to look out for then. We get that vote a little bit later this morning, about an hour or so away. Then tomorrow, we can sit here and talk about some economic data, Bramo. Jobless claims, PPI, retail sales.
Arguably, I'm more interested in retail sales. I know that this is sort of counterintuitive because a lot of people are looking at the others, but how much do consumers keep spending and how much do they push back against some of the higher prices is one of the key questions.
And all we've seen is, even though there's been some revisions, is that the U.S. consumer is healthy. Even though people say they're a little bit concerned about where prices are going, they keep going out and spending.
Full coverage of those releases coming up tomorrow morning. Coming up tomorrow, we'll catch up with Russ Kostrick of BlackRock, Mark Lipschutz of Blue Owl, Anastasia Amoroso of iCapital, and Rolf Habert of Janssen of Hamburg Lloyd. This was Bloomberg Surveillance.
Welcome back to another special BNP Paribas Open update for Bloomberg TV and radio from Tennis Channel. Yuri Lehechka is enjoying life.
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need. Like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
From the UK, and I'm the inventor of the gel razor. And today I'm
looking for an angel investor to fund my project, the Gel Razor, whether that's a working concept and working prototype or manufacturing possibilities with investment or to get me a licensing deal secured. If you go in any supermarket today, you will see packets of razors sold separately with tins of mousse or gel. Hence I developed the all-in-one. The idea is you pressurize the handle, the gel flows through the reservoir up to the head of the razor, coating the blades, ready for shave. My target market is 18 plus, male or female, male blue version, female pink version. What I'm looking for in an investor is someone who's passionate, determined, shares my vision. That's an important step for me, and willing to succeed as I wanted to succeed myself. Patented in the UK in 2021 September with copyright protection. I have a logo for the Gel Razor, which you will see on my LinkedIn profile. Currently working with a company in the US who have done me a lovely sell sheet. Big up to them guys. So if you're interested, contact me on LinkedIn profile, Paul J. Gwilt, GWILT, or email me at mufc219@gmail.com.
The equity rally stalls following another record-breaking session on Wall Street. Traders continue betting on rate cuts with more eco data on tap, and it's President Biden versus Donald Trump in another showdown for the Oval Office. We begin, though, with a big issue. Stocks and bonds start singing a different tune.
Inflation is still driving prices. And what's going on is really inflation-like moves. You're not seeing that classic risk-off relationship between stocks and bonds. Thus, you're seeing very disparate positions. And you're trading on a higher for longer at the same time as you're saying things look great in the equity market.
It was a curious reaction, to say the least. Joining us now is Bank of America's Mark Cabana and Young-Yu Ma of BMO Wealth Management. Young-Yu, okay, you have bonds doing what you'd expect, yields much higher, but you have the S&P at a new record, Mag 7 at a new record, Bitcoin at a new record, all in the face of, yes, slightly, but yes, hotter than expected data. What did you make of it?
It's great to be here. Yes, the data was slightly hotter than expected if you look at the headline numbers. We're actually reasonably encouraged looking at some of the details, though. When we looked at food prices moderating, restaurant costs moderating, and also shelter moderating, along with moderating wage growth in prior jobs numbers, we actually think the trends are positive. So I think the market was looking past the headline a bit, which the details underneath the hood look a little bit better than those headline numbers.
And Mark, I'll get your take in a second, but Young-Yu, let me just follow up on that. If that is your take, are you buying this dip in bonds?
Well, you know, the bond story is a complicated one, I think, because actually our expectation is one that in the second half of the year, we're going to get growth acceleration. And we actually think that the 10-year Treasury yield is due to rise a bit in the second half of the year. So, you know, we're a little bit cautious on duration here in terms of where yields might go, because we do expect that acceleration of growth in the second half of the year.
Okay, Mark, let me bring you in then. Does it make sense to you? Stocks at a new record, bonds sell off. I mean, it's not exactly the playbook you'd expect to see after elevated supercore.
That's right. We think that yesterday's CPI does keep the Fed on track to start easing in June. Our economists still think that the Fed will ease 75 basis points total over the course of this year, but it's going to be a relatively slow cycle. One of the risks that they do face is from still very easy financial conditions. Fed officials haven't talked much about this, but you would imagine that easy financial conditions should be boosting consumer sentiment, and that might help drive spending. And if that's the case, there are risks still somewhat sticky inflation. Yes, we did see core services inflation come down a bit. However, that was offset by a bit of an uptick in goods inflation yesterday. And the Fed needs to be wondering, is the end of goods disinflation in? And how much might this easing of financial conditions be supporting consumer spending? Right now, we still think that the 75 basis points of total cuts from the Fed makes sense. but they still need likely additional confidence to proceed in that direction. And we don't know that yesterday's inflation report necessarily sounded the all clear quite yet.
Well, here's the question, Mark. If financial conditions are still easy and they get easier with a rally, and maybe it helps some that Bitcoin's also at a record with more to spend, the economy is doing okay, why cut it all at this point? Why cut it all this year?
Well, the Fed's answer would be because they do not want financial conditions or the setting of monetary policy to be overly restrictive and generate an unnecessary economic slowdown. However, they're probably asking themselves as well, are rates really as restrictive as we thought they might be? Certainly financial conditions don't tell that. The labor market still seems very robust. Inflation is not exactly falling as rapidly as they had hoped. And so I think that's a very natural question for them. Based upon what they've seen right now, it's probably not enough to change the game plan, so to speak. But this will certainly be something that the rates market is watching very, very closely next week when the Fed meets and updates their economic projections in the dot plot. If the Fed were to show only 2 cuts next year instead of 3, that would be seen as very, very hawkish by the rates market, and that would probably help offset some of the easing of financial conditions. That is not our base case at this point in time, but that is certainly the market's risk case. And it's a question that the market's going to likely continue to ask into the Fed meeting next week.
Right. I mean, we already had Bostic talking about just 1 cut. Maybe you have someone else follow him and it's enough to shift the dots lower. But it is a big week next week, as you were saying, Mark. I want to get the details of it. Let's bring in Bloomberg's Michael McKee, who joins us for more. Mike, what do we got in store for us?
We've got a lot. You know, they accuse Americans of being provincial, so we're going to spread this out to the world. A lot of central bank decisions next week that will influence the markets. You got to pay attention. Bank of Japan on Tuesday, the Fed on Wednesday, the Bank of England meets on Thursday. That one's for you, Danny. Then this week, before we get to baking that cake, we get the last ingredients, the last details that come in. Today, the British got some good news with a slight rise in GDP in the month of January, suggesting that maybe they are coming out of what was seen as a technical recession. The Federal Reserve tomorrow gets retail sales and PPI, and as you can see, retail sales expected to be big after contracting last month, a suggestion that perhaps we are not close to recession. But do we get the thing that Raphael Bostic was worried about, and that is that the economy is speeding up and that could accelerate inflation? We'll get a clue from the PPI. Then the Bank of Japan, they've been in their Shunto wage negotiations, a month-long all-union negotiation with larger and middle-sized employers, and the details are supposed to be wrapped up today. Friday, they're going to announce how much of a rate increase, a pay increase workers get. Right now, the betting is 5 to 6%, which would be rather large, and that would help maybe convince the Bank of Japan that they could begin to dial back on their monetary policy and start to raise rates. Inflation might be in place. The Bank of Japan is forecast to hold rates steady next week, but they may talk about, according to Bloomberg News, ETF purchases ending. It's the only central bank that buys stock, and they haven't bought any in a while, but they might use that as a signal that yield curve control may be coming to an end as well. Feeling is they won't do that till April or later. The Fed is going to hold rates. They'll discuss balance sheet tapering, and of course everybody will be looking for any hint on rate moving timing. And the Bank of England not expected to do anything really at all except hold rates steady. There'll be people watching for any hint on a balance sheet move. There have been some talk about selling off the whole thing, and then the markets at this point not seeing them moving rates until July or August.
Mike, the only appropriate reaction to this is cheers. Thank you. Appreciate it. Michael McKee there. Mark Havana and Youngyu Ma are still with us. All right, let's try to work our way through this calendar because there's a lot there. Starting with bond auctions. We had one yesterday, $39 billion of 10-year. Tepid demand. We're going to get $22 billion of 30-year today. Mark, after inflation that continues to come in at 0.4%, do we turn our focus to the bond auctions again? After all, we saw the worst of the sell-off yesterday around that tepid demand bond auction. Is that coming back into the fore as a risk?
Well, I think that if we are asking ourselves if the Fed might be delivering fewer cuts or potentially maybe not cutting at all, again, not our base case, but certainly something that the market is asking a lot about, you would think that that is going to temper enthusiasm to buy the so-called dip in rates. We do believe that the buy the dip the mentality has been very strong. We've seen the 10-year, just as a proxy for broader rates, really struggle to get back above the 4.3% or so level. And a lot of that buy the dip interest is due to the expectation that the Fed will be cutting. They just need a little bit more confidence to begin lowering rates. And as long as the Fed is telling you that, that is certainly driving support for fixed income. However, if inflation does stay sticky elevated, or if retail sales comes in hotter than expected, for what it's worth, our economics team believes that we'll see a downside miss on retail sales. But if it were to come in hotter than expected, then we're going to start to have these questions about demand. And the market will begin to question, should I be buying the dip if the Fed is maybe not going to be cutting as aggressively as we thought? So that is certainly a risk. And we do very much tie performance in these auctions to the underlying data and those important expectations for Fed cuts or perhaps not.
Well, Young Yu, I mean, you're perhaps the poster child for why, even if you're a little bit more positive, you don't necessarily want to be buying the dip. So you had said that you do expect yields to rise. Just walk us through again that trajectory.
Well, we think in the near term, the 10-year Treasury yield, which we kind of use as a benchmark, is probably range bound here between the high 3s and the low 4s. But if we're looking at the second half dynamics, we think the labor market will continue to stay healthy. We do think inflation will come down and the Fed will cut rates. We were actually projecting in our 2024 outlook a few months ago that the Fed would only cut rates 2 to 3 times this year, even when the market was expecting 6. So we've already been in the camp that the Fed is only going to cut a few times, and we expect growth acceleration in the second half. And if you're looking at growth acceleration, if you're looking at uncertainty around the election, it seems that buying those 10-year Treasuries ahead of that uncertainty is quite risky, because we do think that the tail risk for those longer-term Treasury yields are to the upside, not to the downside.
Well, let's also talk about another item on the calendar. It's the BOJ. We got wage negotiation results tomorrow, the decision next week. Already what we've seen from Toyota, some of the bigger unions, is indeed wages have gotten stronger. Off the back of that, Blue Bay have said that they are all in on shorting JGBs, that they are quite convinced that this move is inevitable to normalize policy. Mark, is that a trade you'd be comfortable with?
I'll tell you that it's a very widely held view amongst a number of our fixed income clients. They agree that the 10-year is probably somewhat range bound in the near term until we get greater guidance from the Fed and clarity on the U.S. economic outlook. But the trade that many folks have on is to be underweight Japanese bonds, to be short JGB rates in anticipation of this move from the BOJ. And for what it's worth, our Japanese economists just yesterday revised their view to now expect a removal of that NIRP, or negative interest rate policy, at the BOJ meeting next week. So they certainly do think that there's grounds to see rates move a bit higher. Our yen rates strategists, however, don't see a real sharp move in rates out the curve. They do think that any move higher there will be somewhat more tempered. But bringing it back closer to home for me, this does raise questions about how much demand will there be for U.S. Treasuries, especially if the Fed is maybe not as convinced on delivering those 3 cuts, which is where the risks are skewing at present. And that does make us comfortable recommending to clients that they can be patient on adding U.S. dollar duration, to be expecting that near-term growth should remain positive. If it does, that will raise questions about the Fed's trajectory, and that may in turn raise questions about demand. And those questions about demand could be supported by actions that we see from central banks overseas as well.
I was going to say, as you noted in one of your notes earlier this week, that the foreign demand that we saw was tepid basically from everywhere but Japan, so big factor. Mark, Young Yu, stick with us. Mark Cabana and Young Yu Ma there. All right, let's take a look at some of the stocks that are moving ahead of the opening bell. With that is Abigail Doolittle. Hey, Abby.
Hey, Danny. Well, one stock that is certainly moving to the downside, Dollar Tree shares are down about 7% or so, at least the last time that I saw this, after the first quarter earnings forecast misses estimates. The CEO saying that lower income, and actually, wow, well below what I saw, now down about 14%. The CEO saying lower income people are being very deliberate with their shopping. They're also closing 600 Family Dollar stores. Investors clearly not liking the news. Eli Lilly up about 0.5%. And this is interesting. The maker of Zepbound is going to be distributing its weight loss drug through Amazon's pharmacy. So in an interesting distribution outlet there, can certainly reach a lot of people. And then finally, Tesla down 2.2%. This stock now, Danny, over the last year, about flat. When you compare that to some of the other big growth stocks, it's a big divergence if you consider the fact that NVIDIA is up more than 200%, Meta up thereabouts. Wells Fargo cutting its rating to the equivalent of a sell on that very thing, saying, how can you have a growth stock with no growth?
Yeah, not helping the NASDAQ out this morning. Underperforming futures down 0.2%. Abigail, thank you very much. Okay, coming up on the program, it's Biden versus Trump, round 2.
I extend an open hand, an open invitation, and I ask you to join us on the noble quest of saving our country.
Folks, it's not hyperbole to suggest our freedoms are literally on the ballot this November.
It's all but set in stone. We preview the 2024 election next. This is Bloomberg.
Regional sports networks. There's a lot of, it's a business that seems to be collapsing. Leagues have sort of toyed around with, should we do something ourselves? Some teams are doing like local TV and streaming. How do you see that shaking out?
So I don't think I'm right on this, but my instincts keep telling me this is what's going to happen. Because if you remember the WWE, they launched their own network that had their own content and had their own pay-per-views. And it was kind of a smart, bold, ahead of its time move. And then they pivoted at the perfect time and they sold their content to, what was it? Peacock.
Yeah.
And that was really smart too, because they were able to leverage that number as high as possible. So they always zagged where the money was and when the opportunity was. I think the opportunity for the NBA with the local teams would be to own all that themselves.
This is Bloomberg.
If you're a disillusioned Democrat, of which there are many today, I extend an open hand, an open invitation, and I ask you to join us on the noble quest of saving our country.
When I gave my State of the Union address, I talked about how far we've come since the 2020 election. I also talked about how much is at stake. Folks, it's not hyperbole to suggest our freedoms are literally on the ballot this November.
Well, it's finally official. President Biden and Donald Trump securing their nominations, setting up a November rematch for the Oval Office. President Biden also ramped up the rhetoric, writing in a statement, quote, "The threat Trump poses is greater than ever." Trump then pushed back on social media, saying our economy is bad and our stock market is only rising because the polls strongly indicate that we will win the election. Let's continue the conversation. Joining us is Bloomberg's Anne-Marie Hordern. So, Anne-Marie, I guess we're now in the full campaign, full rhetoric, full fundraising mode.
Yep, that's right. This is the rematch really no American wanted. If you look at the polls, our recent poll of swing state voters show that majority of voters say Biden is too old and a majority say Trump is too dangerous. But yet again, here we have 2020. But now this is the longest general election in history. So that means these individuals need to be out more. The campaign gets longer, which means they need more money, especially the former President Donald Trump. He definitely trails President Joe Biden when it comes to the war chest. Also, part of that is because he's using some of those campaign donations to pay off his legal fees. So the primary was pretty much set yesterday. It just became official. But there's one place I'd like to focus on, Danny, and that's Georgia. When you look at Georgia, in 2020, Trump lost Georgia by less than 12,000 votes. And yesterday, last night, even though Nikki Haley decided to suspend her campaign, she still picked up 77,000 votes. This just goes to show, at least for the former president, you know, President Biden has his own issue, but for former president, it goes to show that there are going to be some issues when he tries to bring in some of those moderate Republicans or independents when it comes to general election.
Anne-Marie, thanks very much. We're going to see you in just a moment. We got to talk about TikTok. Anne-Marie Hordern there. Mark Cabana and Youngyu Ma are back with us. Youngyu, you said that you're cautious on buying duration ahead of the result of the election. What is the risk that you're worried about? What do you need to wait on the sidelines for? Is it policy? Is it something different? Or is it just plain and simple, whatever market reaction might come from the results of this election?
Well, I think there's a lot of uncertainty still with the election, of course, since it's so far away and there are a few wild cards in play. But a wave in either direction, whether it's a red wave or a blue wave, would probably unleash more spending or more expected spending in the economy and greater fiscal thrust. And we think when we're already running projected deficits of 5 or 6% of GDP, that additional spending could really put some upward pressure on those longer-term Treasury yields. So we think that's a risk in front of the election. We do think certainly a lot of uncertainty, but some of the swing states are still very uncertain in which way they're tilted. So the initial polling, as President Trump said, perhaps leans his way. But if you look at states such as Michigan, Wisconsin, Pennsylvania, there's a lot of correlation among those states, and a lot of them are within the margin of error in terms of the current polling. So a lot of uncertainty, but a wave in either direction could really juice fiscal spending, which we think would add to that duration risk.
The spending that we have seen from the Biden administration hasn't added to inflation. And Callum Pickering has said before that part of the reason it hasn't is because it's also been accompanied by more immigration. So you have both the supply and the demand increasing, which means you don't have that inflation risk. Mark, as we head into a campaign season where around immigration, that rhetoric is picking up, do you look at the fiscal spending that Youngyu is worried about and say, maybe this time around, it could be more inflationary?
Yes, for the rates market, we do think, and we agree with Youngyu, that the most important outcome is a sweep in either direction by either party. So that's control of the White House and both chambers of Congress, because that unlocks fiscal stimulus likely to the greatest extent. And we do worry that if you see additional fiscal easing, that's going to support positive growth, that will run the risk of potentially higher inflation, and that will probably mean that rates need to go higher. Again, it's one of the reasons why we have been comfortable, again, recommending to clients to be patient on adding duration, not because we think it's time to necessarily play for the election quite yet, but really because that does represent a risk to potentially better growth in the future. And again, if that indeed does happen, then it will likely mean that the Fed needs to cut less than the market is currently anticipating.
I'll tell you one market that doesn't seem to care about this risk and maybe any other risk. It is this corporate credit market. Just looking what's happened to triple Cs, it is remarkable. The demand and the record issuance. Triple Cs have gained for 14 consecutive days. That's the longest streak since 2021. And at the same time, spreads are at a 2-year low. Youngyu, is enough risk priced into this credit market, again, especially in the riskiest part of it?
Well, there's a lot of money flowing into that market. So I think that's what's giving it a lot of support. So you have a lot of private credit funds that are being raised, a lot of money in that space. So I think this has a ways to go here. We don't think that there's near-term risk in this market. If you're looking at the medium term over the, say, the next year or two, are investors being adequately compensated for the risk? Perhaps not. But in the near term, I don't think those trends are going to change anytime soon.
Mark, quickly, what's your take?
So we, from some of the flows data that our team monitors, we have certainly seen ongoing very strong inflows into the corporate space. We think that that is supported by this sort of buy the dip in everything mentality right now. This view that the U.S. economy is in a real sweet spot where growth remains strong, policy doesn't seem overly restrictive, rates are not particularly problematic yet, and that is contributing to some modest declines in interest rate volatility. It's also helping suppress volatility in other markets, implied vol that is, equities, FX, And that we do think is very conducive for investors who are looking for carry. And the corporate bond market certainly provides a great avenue for that. That's likely what's driving the inflows. And until there's higher macroeconomic volatility and higher volatility across markets, it wouldn't surprise us to see those flows continue.
Mark, Youngyu, we're going to have to end it there. Thank you both so much for joining this morning. Appreciate it. Okay, coming up on the show, the morning calls, and then later we're going to be speaking with Linda Dussel of Federated Hermes, who joins us at the opening bell, explaining why U.S. markets are, I love this, the dirtiest clean shirt in the laundry bag. That conversation still ahead. This is Bloomberg.
You're a famous photographer, you're a conservationist, you're an activist. How would you define yourself?
I think I'm just a human trying to figure out how to be a better steward of our little planet. I am a biochemical engineer by training. I studied marine biology, fisheries, aquaculture, and then I realized that the ocean is very much out of sight and it needs help. And so I became a photographer to be able to communicate with a larger audience. And thank goodness I was good at it.
When did you realize that actually photography was your passion and you could make a real difference to our world?
You know, I didn't start out as being a photographer, so it was not until 1990-something, 96, when I picked up a camera, and I became a professional photographer soon after. And it's one of those things that it's like learning another language. You learn a few words, and then you put a few sentences together, and one day, you might be able to write poetry.
Nobody brings you top names like Bloomberg.
The expectation that interest rates are going down is creating animal spirits again.
Bloomberg. Context changes everything.
S&P futures at the highs of the morning session. NASDAQ underperforms, as does Russell. Small caps can't keep it higher with the rest of the market after that CPI figure yesterday. Okay, let's get you some of your morning calls. A look at some of the analyst recommendations on Wall Street. First up, Bank of America raising its NVIDIA price target to $1,100. Further upside seen given the stock valuation and ownership levels. Next up, Jeffrey upgrades Southwest to hold. They're expecting limited downside following yesterday's sell-off. And finally, Wells Fargo downgrading Tesla to underweight. They're seeing downside risk due to recent price cuts. The volume can't keep up. Those shares down 2%. Coming up, Linda Dussel of Federated Hermes on why the Magnificent Seven look more like the Magnificent Five.
Names in tech are on Bloomberg.
There is a natural tension between the need of a supplier to scale
and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices, they all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to provide great index products and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything.
What happened was you were offered a money-losing women's basketball team, and you said, I want to be in the other sports as well. Is that right?
Well, yeah, you know, you got to be smart about this.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Opening bell happening now, and we are in the green for the S&P. After a record-breaking rally on Wall Street, despite hotter CPI, despite 0.4 for a consecutive month, even so, we are seeing a turnaround on the NASDAQ 100, weighed down by Tesla after a rare downgrade from Wells Fargo. The EV story, they're not convinced that price cuts will help. Russell 2000 futures also on the back foot after underperforming yesterday. When it comes to the rest of this market, bonds are also under pressure, higher by 2.5 basis points for your 10-year yield. We were just speaking to BMO, who said be cautious of buying duration ahead of election risk. Meanwhile, euro strengthens just barely. We're at 109 versus the dollar. NYMEX crude up 2.33%. We had a report of shrinking U.S. stockpiles, and they celebrate at the bell, and they celebrate in these crude markets. All right, one stock to watch at the open. It is Intel, the Pentagon pulling out of a plan to spend as much as $2.5 billion on a grant to the chip maker. Abigail Doolittle has more. Abby?
Well, Danny, we did break this news, of course, after the close yesterday. Investors not liking it with that stock down more than 1%. And the idea behind this grant, so as you mentioned, the Pentagon was slated to give Intel $2.5 billion out of $3.5 billion to fulfill some of the 2022 CHIPS Act to make them a dedicated supplier for processors to be used in both military and intelligence applications. Well, with the Pentagon pulling out, that means that the other provider of funds, the Commerce Department, U.S. Commerce Department, that they could be on hook. Initially, they were only supposed to give $1 billion, but maybe now some are saying that they would give that full amount. But does that make sense? There could, of course, be contention around that. I think that the uncertainty around whether or not that $3.5 billion, where will it come from? Will it come from the U.S. Commerce Department? Does have this stock under some pressure. Also interesting is the idea that Intel CEO Pat Gelsinger just last month said that the company would be receiving an award from the U.S. government very soon. He didn't provide an exact timeline, but with this news, it kind of goes in the face of that. And relative to that CHIPS Act, it is, of course, to help the U.S. become a little bit more dominant in the chip space. Taiwan right now is the leader for global chip production. Intel, again, under pressure on this news that the Pentagon has pulled out of that $2.5 billion worth of funding.
Abby, appreciate it. All right, let's turn now to earnings. Petco reporting comparable sales for the fourth quarter that topped estimates, along with a new change at the top. Katie Greifeld has more. Hey, Katie.
Hey, Danny. Petco, ticker WOOF, I will note. It's on the move higher today after that update. Let's start with the numbers. Fourth quarter adjusted EPS, you take a look at what we saw there. That came in at 2 cents, right on the money. The estimate was for 2 cents. Fourth quarter net sales a little bit higher than expected at $1.7 billion. It was the fourth quarter comp sales beat that analysts are pointing to as one of the reasons why you're seeing this move higher. Fourth quarter comp sales, they actually did fall about 0.9%. The estimate, though, had been for over a 2% decline, so a bit of good news there. Also, the CEO change, like you mentioned, drawing some eyeballs today. Petco said that Ron Collin, I hope I'm saying his name right, he stepped down as CEO and chairman, and a member of the board, R. Michael Mohan, he has been appointed interim CEO. I will point out that he has been on the Petco board since March 2021. He was previously the president and COO of Best Buy. And Bloomberg Intelligence coming out with a note saying that this maybe isn't as unexpected as you might think. You think about the underperforming quarters that Petco has put up and also what they call rather desperate strategies that put into question the direction of the company. Makes sense that they're seeing a little bit of a shuffle here. I will note that even though you do see Petco up almost 6% today, it went public in January 2021 at $18 a share, currently trading below $3 now.
Katie Greifeld with the latest on Woof. Thank you for that. From pets to chips, shares of NVIDIA are paring their pre-market gains. They're trading lower despite a big boost, I should say, from Bank of America. They now have risen their price target to $1,100, calling their upcoming event AI Woodstock. Ed Ludlow joins us now. I mean, AI Woodstock, really, Ed?
I'm hoping so, because I'm going. GTC conference, GPU tech conference, and it's actually critically important. It's interesting, the stock's down almost 2%. It jumped 7.2% on Tuesday. We can say at least there is some positioning going on ahead of GTC, right? There is going to be substantive information given there. It's a developers conference. You know, it's probably historically most analogous with Google I/O or Apple WWDC. But in this case, what the street is bracing for is a product roadmap, the next big thing. And for NVIDIA, that's probably the B100. That will be B100, not H100, B100. And that will be probably their first multi-die chip. And multi-die chips are important because what they do is basically take a large form factor and partition it into smaller form factors. That improves power efficiency. And basically, the B100 is likely to have double the performance of the H100. And the excitement around that is that if NVIDIA can tell investors, here's our latest GPU, here's how it fits into what's happening with AI, here's how quickly we can get it into production and ramp, then there'll be evidence that they can basically hold on to this competitive moat in building AI accelerators that are being used all over the world right now in the hyperscale data center context. But it is a developers conference, and I think a lot of people forget that NVIDIA's done a lot of work itself in software. Software, not just in the AI context, but they're also building their own large language models. So my understanding, about 300,000 people attend GTC, both virtually and in person. This will be the biggest in-person GTC ever, but also a kind of return after the pandemic era and post-pandemic period. And one of those 300,000 will be me, and we'll do some good reporting on the ground. The stock down 2%. But as I say, that's probably a pullback from a big jump on Tuesday.
Ed, appreciate it. Yeah, Amy Wu Silverman saying that March 18th conference could be a clearing event for the entirety of the market if it disappoints. Okay, let's turn back to earnings now. Dollar Tree is falling short on both its profit and its annual sales outlook, as well as closing about 600 stores. Simone Foxman has more. Simone.
Yeah, Danny, shoppers are supposed to be looking for bargains, but Dollar Tree watching its shares fall at the moment the most since August after some pretty subpar results here. For the first quarter, it's looking for earnings per share of $1.33 to $1.48. The street had anticipated $1.71, and its fourth quarter was a little bit light as well, even though it saw revenue rise 12% on a year-on-year basis. It saw same-store sales rise 3%, but at Family Dollar, that was not the case. Same-store sales were down 1.2%. The company's saying on its earnings call this morning that persistent inflation and reduced government benefits continue to pressure that lower-end consumer that comprise a sizable portion of Family Dollar customer base. You mentioned maybe this is part of why it's deciding to close some 600 Family Dollar stores in the first half of fiscal 24. That will be added to by another 400 Family Dollar and Dollar Tree stores as their leases expire this year. Note that it operates about 16,700 stores, also mentioning shrink as a headwind in the first half. Bloomberg Intelligence says closing these stores is a needed move, though the $2 billion in impairments that it's notched suggests that closing stores does not always work, in the right formula, Bloomberg Intelligence says, remains elusive. But shares falling for Dollar Tree this morning and bringing down the shares of Dollar General, Five Below, other discount retailers as well, Danny.
Simone, thank you very much. Simone Foxman there. All right, the overall market is little change this morning with tech stocks weaker after another session of all-time highs for Wall Street yesterday. Linda Dissel of Federated Hermes remains cautious on this market, writing, though the U.S. has been on a roll, in some sense, it's the dirtiest clean shirt in the laundry. Japan is up 20% on the year. European stocks up 9% versus the S&P's 7% gain. How long can this keep going? Linda joins us now. Linda, I love this because usually we say it's the cleanest shirt in the laundry. I had to double check this because I couldn't believe that Europe has actually outperformed. So let me ask the question you did. How long can this keep going?
Well, thank you so much for having me this morning. To be clear, we have been bullish at Federated Hermes. We just thought we'd finish the year at S&P 5200, and we're almost there as we speak. So it's been quite a momentum market. And that's what we mean by how long can this keep going on. This is a momentum market in the United States more than you have anywhere else in the rest of the world. That's leaving a lot of other stocks, particularly value stocks, behind. And so if I remember, it's an election year. You usually make all your money in the back end of the year after the election uncertainty is over. We have been tracking normally here for the first part of the year versus history, but it tends to get sloppy in the middle of the year. So we're saying it'll probably be a volatile year, but so what? Because we still think you could get the 5,200 by year end, and we may have to revisit that to the upside.
I love that. It's volatile, so what? A good reason to remain steadfast in the face of that volatility. Linda, in terms of this being a momentum market, every estimate is different as to what the trend followers are due. Goldman, for their part, thinks CTAs have been running, or UBS rather, have been running a very hefty long in this market. Part of the reason we continue to see upside, but they say if the S&P drops a significant amount, which they're saying is about 5%, you could get selling to the tune of $80 billion from those trend following CTAs. Are you concerned about the momentum nature of this market, that it can reverse quite violently and suddenly when it does?
Well, I think they're right about that. When you ask me if I'm concerned, we're saying it'll be volatile, but so what? And we want to really emphasize that because the fundamentals of our country and earnings are good, and we think that we can finish this year positively. But when a third of the market is just a handful of stocks, and stocks that pretty much everybody owns, and stocks that are right in the middle of the momentum trade, if something goes wrong, and I think that NVIDIA, which I'm not commenting on any names at all, but NVIDIA, which is a well-known household name, traded within a 10% range on Friday. That's a lot of nervous holders who may dump and give us a really nice correction, which is just what the doctor ordered, actually.
The irony, though, of this year, Linda, is if you're an active manager, the way that you beat the benchmark was loading up on NVIDIA, on those types of names. If they can be the catalyst for a correction, if you still want to outperform the market, do you need to do what you're saying and look elsewhere? Or is it still the case, if I want to do well, I got to own these AI names, which are outperforming, because so far this year, again, that's the only way I've been able to do it.
Yes, and what I'd like to emphasize is that, and I was there for when the internet bubble burst, this stock market is nowhere near as expensive, nor as the leaders anywhere near as expensive as they were then, which means that if we get a pullback, we probably won't get the kind of crash that you saw then, but what you will find is that these names, which are excellent companies, their customers are rich themselves and can spend lots and lots of money, and AI is for real good. That's a market that continues, names that continue to do well. But if you believe all this, you can believe that breadth really will happen, and we can find better returns on a percentage basis by looking outside of just a handful of names. We've been doing it in technology so far this year, and we've been doing it in some early cyclicals, but you can imagine that the market can expand even beyond that.
As one trader told me, the thing that people do is they wake up, they don't check the market, they just check NVIDIA. So it's a hard habit to break out of. But Linda, you write that it was not rate hikes that killed the tech boom of the 90s. Rather, it was weakening economic growth and tech spending outlooks that did it in. And at the moment, we remain on trend for tech spending. Linda, I think that's such important historical context because we've been freaking out about higher rates, and then we stopped freaking out, and then we freaked out that we weren't freaking out about it. But it is that weakening economic picture and weakening tech spending which did in the bubble. Is that at risk of playing out again?
That's the thing about human nature. We seem to like to freak out, and that's what gives us buying opportunities. So if we acknowledge that it was the economy that was weakening, and we say, okay, even around the globe, they're having to raise estimates for global GDP this year. The U.S. has been in a booming situation. We remain a very strong country, an extremely resilient consumer. And we talk about the dollar stores, and we talk about the lower income cohort, which is having trouble. We'll get some news this week on Thursday from retail sales, but the vast majority of the United States population is good. And if you look at the people in the prime age working arena, age 25 to 54, they have just a low 3.3% unemployment rate for the last 3 months. This is a consumer that's got a job, that's got money, that has lots of money to spend it in a lot of places, and maybe want to spend some more in the markets.
Yeah, certainly, especially if, I don't know, if you hold Bitcoin right now and it's at a record high, maybe that's something else you can put to work. Linda, we started out by mentioning that of the outperformance of Europe. The DAX also hit an all-time high yesterday, along with everything else. Just quickly here, Linda, only about less than a minute, but can you keep buying Europe given the economic issues it has?
We have slight overweights at Federated Hermes on international. That includes both developed markets and Europe. And as you're suggesting, there are a lot of cross currents. They're in trouble. Germany's the strongest sister over in Europe, and they are in an economic recession now, and yet they make new highs in the market. It's a relative game as versus the earnings estimates. And inflation comes down very dramatically around the globe, mostly EM, but also Europe, and better than here in the United States. That's the reason why we're overweight Europe, if only slightly so.
Linda, really appreciate your time this morning. That's Linda Dissel of Federated Hermes. And again, this year might be volatile, but so what? Love that from Linda. Okay, coming up, TikTok's ready for a legal fight as the House votes on a crackdown.
We're not there to ban it. I've said we want to make it tic-tac-toe. We want to make it something that is not a fearful social media platform, but one that is very positive.
Well, the latest on TikTok's fate next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Let me ask you about politics. You've been involved advising presidential candidates, I presume presidents as well. You ever have any interest in serving in a senior position in the federal government or running for office?
Absolutely, unequivocally, no.
The aggravation factor isn't worth it?
It's the aggravation factor, but it's more importantly is I don't believe there's any integrity in it.
So you do give money to politicians, though, because that's the system, but you...
It's part of the game. I think, to be honest, I think there's a need for a multi-party system in the U.S. to give more people a choice about where they can throw their voter support and their political support, but also to cause the country to sort of come together by having everybody have a role in deciding what is in the long-term best interest of the country. I've often believed that Black Americans as a people and as a voting bloc should adopt the same position that the original founders of the Congressional Black Caucus had in early 1970. Their philosophy was enunciated like this: Black Americans should have no permanent friends, no permanent enemies, just permanent interests.
You never hear people saying, I want my little boy to grow up to be an insurance person. Did your parents tell you to be in the insurance world?
I really liked the insurance sector at the time. We are basically promoting and ensuring social cohesion. And at the time, I wanted to make a difference and wanted to go in there.
Plainly is a conduct law, meaning we're acting because of the demonstrated malign national security threat of TikTok, not because of the content of anybody's speech. And the bill is narrowly tailored, which is key for First Amendment analysis, because it simply requires divestment, meaning the millions of Americans that love TikTok, I'm not one of them, but they can continue to use the application, but just in a more secure way.
I guess the commissioner doesn't have his own TikTok account. That was Republican FCC Commissioner Brendan Carr speaking earlier on Bloomberg. The House votes on the bill at the top of an hour that would force TikTok's Chinese parent company to sell it or face a ban in the U.S. Sources say TikTok is planning a full legal fight if the bill becomes law. So on Vote Watch, joining us is Anne-Marie Hordern and Ed Ludlow. Anne-Marie, what do we know about how people are likely to vote on this so far?
I'm on Vote Watch. Ed is on Buy Watch. Look, when it comes to this vote, it's likely going to sail through the House, as it did that committee that was a bipartisan support of 50-0. So those committee members want to see it hit the floor. It's coming under this rule suspension, so it needs to get 2/3 of a majority for it to go through. Steve Scalise, number 2, the House Republican leadership team, says that this is going to pass. When you talk about who some of these individuals that might vote against it, you could see individuals that are concerned with free speech. We see that from a number of Republicans, but also progressive Democrats. Also, many of them who are concerned about the fact that this is a way to reach youth voters. We can't forget, the Biden campaign is using this to campaign on, although TikTok is banned from use on government phones in the White House. Someone like Alexandria Ocasio-Cortez, a progressive Democrat from New York, already tweeted, Danny, that she's a no when it comes to this vote.
Yeah, the irony there is definitely not missed on many people. Ed, this isn't exactly the first time that TikTok's had this threat. Perhaps it's the first time it feels real. But what has TikTok already done to prepare, and what can they do to prepare for the inevitable outcome of this?
We'll go back to the reporting. So sources say that TikTok will wage a legal battle to prevent or at least make a sale of itself or its US operations the avenue of last resort. Go back to China's position on this. And China has also said through its own channels that it would block any such deal. And you know, we're proceeding on the basis that it's a foregone conclusion, right? Because the House is likely to vote in favor of the bill. If there are reservations in the Senate, their bigger picture about the powers this would extend to the administration in terms of oversight and censorship. But I say all of that because the list of potential buyers would be small anyway, right? Think about the antitrust act administration's taken against the biggest tech companies, Apple, Meta, Microsoft. Would they be allowed to buy it? Bobby Kotick, the former Activision CEO, there was a report in the last 7 days. He was putting together a bid to potentially buy TikTok's US operations. Rumble, the conservative social media platform backed by Peter Thiel, the stock jumped 18% yesterday on reports that it is considering a bid for US operations. How much are those US operations worth, right? ByteDance, the parent company of TikTok, is valued at around $240 billion US. Well, how do you take a chunk of that, and how would they let it proceed? I think there's a lot further to run on this, and we remind ourselves that 170 million Americans use TikTok, and some of them quite like using it.
I think that's an understatement. I think maybe addicted is more an accurate answer. I mean, I like TikTok, so, you know, my full bias is apparent. Anne-Marie, Ed, thank you so much. And the House floor is gathering, getting ready for this vote. Again, it's expected to happen in about 7 minutes time. But as Anne-Marie so wisely mentioned to me during the break, this is Congress, so it might not happen.
500, but interestingly, most sectors are higher, led by energy up 1 point, up about 1.75%. This with Oil up more than 2%. Utilities higher despite the fact that yields are up. That should make those dividends look less attractive, but investors today seeking a little safety. To the downside, it's all about technology, down 1.1% as NVIDIA is down sharply. Its worst day in a few days, a rare break for the stock that has just been rallying on that AI craze. But one really unusual pocket of strength, Danny, because of course Chinese equities have been underperforming U.S. equities for a few years now. But take a look at the Golden Dragon China Index, up about 8% over the last 4 days. I think this is technical trading because you have this index over this time period pop above not just its 50 and its 100-day moving average, but today it's 200-day moving average. So let's see whether or not these gains can hold.
Yeah, China stocks in a technical bull market, but again, how long does that last? Abigail, thank you very much. Okay, coming up, it's the market moving events you need to be watching. That's next in our trading diary. This is Bloomberg.
You formed a partnership with Penny Pritzker at some point to do parking, is that right?
Yeah, so when I was working at JLL, that we went through this real estate recession in the early 90s, and the senior people at the firm said, let's do a retrospective on all these different asset classes to see what happened, how we overpaid, why we ran into so much trouble, what really happened in the marketplace. And when I did that, I recognized, wow, there were a lot of reasons why I liked the parking assets better than I did office and retail and industrial. And so I started really noodling on the differences between those asset classes and came up with a rationale to start a business in the parking space. But I crossed paths with Penny Pritzker, who later became our Secretary of Commerce. And she liked the idea, and she and I went off on this adventure together and built a real estate operating company in the parking space.
It's 56 past, about 30 minutes into your trading day. We got outperformance of Russell, underperformance from NASDAQ 100, down 0.6%. Okay, let's set you up for the day and for the week. It is your trading diary. The House is expected to vote on that TikTok bill at the top of the hour, so just a few minutes' time. The Treasury selling $22 billion in 30-year bonds at 1 p.m. Eastern. And President Biden will be discussing the U.S. economy from Wisconsin at 5 p.m. Then you get more data, U.S. PPI, retail sales, and another round of jobless claims on Thursday. And then finally, on Friday, we round out the week with the U-Mitch Sentiment Survey. This was the countdown to the open. Stocks head lower. This is Bloomberg.
regional sports networks. There's a lot of, it's a business that seems to be collapsing. Leagues have sort of toyed around with, should we do something ourselves? Some teams are doing like local TV and streaming. How do you see that shaking out?
So I don't think I'm right on this, but my instincts keep telling me this is what's going to happen. Because if you remember the WWE, they launched their own network that had their own content and had their own pay-per-views. And it was kind of a smart, bold, ahead of its time move. And then they pivoted at the perfect time and they sold their content to, what was it, Peacock?
Yeah.
And that was really smart too, because they were able to leverage that number as high as possible. So they always zagged where the money was and when the opportunity was. I think the opportunity for the NBA with the local teams would be to own all that themselves.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the...
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Wednesday, everybody. You made it to Hump Day. We will get you over the middle of the week doldrums here. A couple things happening that we want to highlight here. TikTok ticking its way down to maybe not existing here in the U.S. anymore. Also, sell tech by small caps. That is the trade that's picking up yet again today as rates really climb higher. We're going to break all of this down for you. Ben Emmons will be joining us in just a few moments. Senior Portfolio Manager and Head of Fixed Income over at New Edge Wealth. Jen Ryan's here. Paul Sweeney is still on vacation. And John Tucker also joins us.
I'm kind of on vacation in my head, but...
Is that different than...
Any other day? I suppose not. I should say we're being brought to you by Interactive Brokers. Interactive Brokers clients earn up to 4.83% on their uninvested, instantly available U.S. dollar cash balances. Rates subject to change. Visit ibkr.com/interest rates to learn more. Major averages mixed right now after yesterday's record close. You have 8 of the 11 major industry groups in the S&P 500. They're higher right now. Energy and utilities, the best performers, and then you have information technology. That's the worst performing group, and that's home to shares of NVIDIA. NVIDIA shares right now down about 3.5%. Meantime, Marvin Lowe at State Street sees stocks gaining support.
You know, one of the things that we look at pretty aggressively is liquidity, and there still is a lot of liquidity coming in the system, and that ultimately supports risk assets. Some of our institutional investor flows, which are based on what real money is doing, is showing that there is a broadening in embracement of risk.
And some of the stocks on the move, Eli Lilly teaming up with Amazon.com to expand its business of selling weight loss drugs directly to patients. Tesla stock, that's lower after Wells Fargo cut it to underweight. And Dollar Tree, which has been facing complaints of being a total dump, they plan to close about 1,000 stores. S&P, well, words to that effect. S&P 500 right now, 10 points lower. That's down 0.2%. The Dow is 77 points higher. The NASDAQ 100, 151 points lower, and that is down 0.8%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Jen and Alex.
Tell us how you really feel about Dollar
I've been in. I've shopped there. I have no problem with it, but it's just like, yeah, they really needed something.
Yeah, I do shop there.
And
sometimes.
the workers there are just some of the most miserable people.
Well, understandable. It is such a depressing place to be. Anyway, I should point out, Jen, that we're watching TikTok because the House is going to start to vote in any minute. I don't know what any minute means when you're in the House, but and this would in effect ban TikTok.
I think any minute means today.
At some point today before EOB. Okay.
I mean, and then teenagers across America are waiting on the edges of their chairs to find out if their futures are going to be filled with boredom.
Right. Or, I mean, does someone else wind up buying TikTok? Can they afford it? Do they just migrate to a different platform? There's lots of things to get through on it. Could be quite interesting.
It could be, but then let's bear in mind that TikTok itself is not going to take it lying down if there's a vote for a sale or a ban.
Yeah.
Because there's going to be a whole lot of legal efforts expended to make sure that they can keep things as they are.
All right. Overall in the market, though, it's steady as she goes, but I'm interested in the small cap rally. Abigail Doolittle is here to break it down for us. I mean, rally may be overstating it, 0.4%, but the divergence with, tech is quite interesting.
Yeah, it is for sure. I mean, especially to the stocks, it's a greater than 2% divergence, given the fact that the stocks on that NVIDIA weakness that John was just talking about is down about 1.9%. And, NVIDIA has just been such a powerful engine to the rally that we've had out of, the October lows of both 2023 and 2022. I'm taking a look at that chart right now, and the top of it looks like it's maybe a possible top. It looks like some folks are really wanting to get out and that there could be some more selling pressure. I mean, this stock right now, it has been so wildly popular that it has been almost 100% above its 200-day moving average. That is overextended. This, as its RSI, an indicator of momentum, is no longer even overbought. So you have this stock at record highs that it wasn't at weeks ago with the RSI at a lower level. That is a bearish divergence, telling you that some of the people that bought in recently are rethinking it, and some of the people that bought 6 months, a year ago, 2 years ago, are very happy to sell to those people and potentially buy it back at some way on the way down. In terms of small cap, yeah, it's a smaller rally. That Russell 2000 up about 0.5%. That, speaking of divergences, that's one of the big divergences because the Russell 2000 hasn't put in an all-time high in I think it's a year and a half. It's still down about 15% from its all-time high, whereas you have large cap at these record highs. Now, I'm not saying that this is a 2008 or 2000 type time period, but sometimes when you have stock weakness, the Russell 2000, the stocks will lead it, and that was certainly the case in 2007. The Russell 2000 started to roll over around that time period, months before the large cap indexes, and months before, a year, frankly, before what happened in 2008.
But how seriously should we take that kind of dynamic at this time around in this particular week? Because, after yesterday's big CPI print, we're a little thin on motivators for a new direction in stocks.
Yeah, I think that investors are waiting on, of course, PPI. I think that also it's really the Fed next week. The key is, we were talking about this a little bit yesterday, does the policy statement and does Fed Chair Jay Powell in the press conference confirm the idea that 2024 is still, in their view, a year of cuts? Or even cut, just so long as they are cutting, just because you do have people on the streets, such as Torsten Slok, saying that they may not cut at all. Yeah. I think that so long as there's that support for more liquidity coming into the market, investors will be okay, but they want to hear that, I think.
Jeffrey's not agreeing with Slok, but raising the possibility that if the data continues to come in hot, and there's just too many sectors of the economy that are capacity constrained, so if you cut, the demand's going to pick up right there and inflation comes right back. Can we talk Tesla for a second?
Sure.
So a growth company with no growth.
Yeah,
I mean that's a rough headline from Wells Fargo. There, this is Colin Langan writing in a note to clients, downgrading the stock to the equivalent of a sell rating, expecting Tesla's sales volume to be flat this year and to fall in 2025. Basically, that the car price cuts are just not enough.
Well, here's something. So Tesla stock over the last year is now flat to down slightly. Compare that to NVIDIA, up 288%. So from a growth standpoint of just the stock performance, yeah, there's absolutely no growth there. In terms of the growth relative to the top line, this year is modeled at 13%. The bottom line modeled at 16%. So, you know, I don't know if it's fair to say that there's no growth, but it certainly isn't the 50% growth, top line growth we had in 2022, and it's not the 15%, or excuse me, the 126% growth that we had on the bottom line in 2022. It's certainly a good title, and it's attention grabbing.
They gotta sing for their supper.
Yeah, they do have to sing for their supper.
Yes, they do, yes.
And then I think the issue that Wells Fargo's is bringing up is that there's been some cuts in prices, and the analyst is asking, what are we getting out of that? Because we've seen the cuts in prices, but not quite the pickup in sales that you would expect, and that's the focus.
Well, I think that the pickups in sales did happen certainly last year, but how long can it you know, you can only grind it into the ground. You can only cut so long before, you know, the market is saturated in terms of people who want to buy Teslas, and before it just damages margins way too much. I think that that's a big piece of the concern. Like, if the volume continued and you had the price cuts, it would be one thing, but at some point, yeah, it's an issue. And this,
yeah, you just can't sell them. You just can't sell them right now. The EVs.
Yeah, you've got to get the consumer on board, right? Yep. You've got range anxiety. You've got people still getting squeezed from high inflation. It's kind of like, am I going to take a flyer on an electric vehicle? And this is something that all the automakers are dealing with.
Or unless the gasoline prices get to be $5, John Tucker freaks out. He buys an EV. I mean, that's...
Yeah, no, I would, except what am I going to charge it? It's just like, there's just, you know,
it's range anxiety. This is the
issue. No, I am still waiting, and I'm serious
flat.
about this. I'm still waiting for hydrogen vehicles, because the infrastructure there, I think, would be a lot easier to build and build out.
Gasoline prices were $5 to $6 consistently. You'd find a way to charge.
Put solar panels on top of my car.
All right, Abigail, thanks a lot. We'll see you at the top of the next hour. We appreciate that. Let's get Ben Emmons' take here. He's Senior Portfolio Manager, Head of Fixed Income at New Edge Wealth. He's standing by here. So, and also, if you are in the market, you read his notes. They are so great. They are so sweeping. They come at least 2 to 3 times a day. It's one of my go-to things to read, Ben. So I do want to say thank you for those notes. Do you have a Tesla? Do you have a Tesla or an EV?
I don't, Alex. And by the way, fantastic to be with you on the show. I think the last time you and I spoke was more than 5 years ago.
No, that can't be true.
Yeah, it's true. It was right before the pandemic. I was in the studio in New York with you. So great to be back with you. Yeah. So thank you, by the way, for the shout out on the notes. I don't have a Tesla. In fact, I have a Volvo. That's that's kind of my favorite for my wife. That's like a European thing, right? It's like, we're always stuck with that. And but a normal gas car. But to the EV discussion, I wrote about it not that long ago about these EV tariffs, right? As in, there's going to be, I think, part of that trade war story coming back, that the flood of EVs from out of China is so significant. I was just reading the BYD company, right? They're putting out a new car for $12,000 that you can buy. And this is why these EVs are flooding our markets. I think you're going to get a lot of pushback from the US and Europe on trying to curb those cars coming into countries, because it's a major price competition to the likes of Tesla and others.
Well, can you talk a little bit more about that? Because we've got all the major automakers have their own EV plays, and then we've seen some of them pulling back. And so where is this all going to settle?
Yeah, I think it's going to settle at lower prices, I'm afraid, right? This is real price competition. And I think part of the reason why Tesla is losing its Magnificent Seven status, it had a very smart tactic, I think, about 1 year, 2 years ago, lowering prices and therefore juicing the sales. And now you're seeing the opposite sign of it, at least for now, right? They may have to cut more in prices to get higher sales, right? So it's the competition aspect, microeconomics, if you will, but I think this is what the EV market is ultimately about. It's going to be even lower prices, and for China, that doesn't matter, right? They like to continue to produce at even lower prices. So I expect more competition.
So Ben, let's broaden out for a second because we've been talking about how the NASDAQ is selling off. I use that relative term. And you still have small caps holding up. Is this a rotation that we think, putting yesterday aside, this rotation from tech to small caps has legs?
I think it does have some legs, Alex, because it makes sense that if you have a specific group, semiconductors in this case, NVIDIA may be the star of it, but there's other related ones, if you think of Broadcom, of IBM, or any of those companies, that it expands itself out to other sectors. Now, I thought what was really interesting was the earnings from NVIDIA highlighting that their technology is now being used in healthcare, in financial services, in automotive. And I thought that was like, okay, this is actually Huang Jensen's view about these AI agents, right? They're spreading across the industries. And I think this is part of that broadening aspect of the market. Like, if that's true, the investment that the administration making in these semis in the economy, plus NVIDIA being such a powerful force on the economy in itself by spreading all this technology, then the other sectors are going to lift up too. At least the market will try to price it, what it means for the economy, for other companies. Of course, in the end of the day, we do have to see AI truly pay off with sales, meaning you use AI and it can actually generate more sales in, say, in healthcare or financial sector, say, right? We haven't seen that yet, but I think the market wants to broaden out to discount that these sales will increase over time as AI is more widely adopted.
I wanted to, if we could shift gears just a little bit and think about yesterday's CPI print, because we've got this broadening out in the equity market, but there's also an enthusiasm there for the Fed to continue with its easing message. And so I wondered if you thought the CPI number yesterday should, give anyone some confidence that there's still cuts coming, or are you more of a mind that, hang on a minute, we might see fewer cuts than people are expecting?
Yeah, I'm more on that camp, fewer cuts, because I think what the CPI data showed was that, one, the disinflation is stalling out. That's clearly now happening. Two, we're certainly not going to go back to where we came from pre-pandemic. There's too much pricing pressure building in the economy still. We've certainly not that the disinflation is going to flip over into deflation, even though I would note that Bloomberg Intelligence had a very nice graph out on how the number of categories with prices below zero has definitely increased. But if you look at the percentage, it was about 35% of the CPI index. That's not too significantly different from a few years ago, but it has somewhat increased. I guess, again, price competition probably in the economy. So I think the Fed is at that moment to say, this CPI data underscores that the economy stays above trend. And until the economy truly moves back to trend, right, just to trend, you cannot actually cut rates. I think that is, the big challenge for the Fed here, why they probably stay on hold for a little while.
Right, and first of all, if you shout out Bloomberg Intelligence, like, you're coming back all the time. Like, that's a definite +1 for Ben Emmons. But if that's the case, and I mentioned earlier that Jeffrey's starting to talk about that also, sort of following Torsten Slok over at Apollo, why buy small caps?
Yeah, I think you need to trade that differently, Alex. People, if you trade it too simplistically, like cut rates and then buy small caps, there's a lot in between there, right? The small cap index, a lot of people look at that like, okay, there's about, I guess, 40% or so that are companies that are highly indebted, non-profitable companies. I guess they benefit from lower rates. But it's also just, I think, it was of the economy in itself. I think small caps, I think of small business. I think of, what's all happening on the ground. So what was, I think, notable was what Bostic said, that they went out and did a survey among businesses, and those businesses said, like, well, we think that if you cut rates, the economy is only going to get stronger, right? We're actually waiting for you to do that, and then we'll see even more activity. So it is partly true that I think cutting rates will benefit small caps, but there's also some micro aspects to it. So I won't be all in. Our view, by the way, at New Edge is that, as Cameron probably talked to you about it, is that we're taking a very selective approach to small caps because, as you can tell, we haven't set a new record high in small caps, really because there are doubts about rate cuts. On the other hand, it's also about specific companies there. So it's a bit of a mixed bag, I think, and it probably will stay that way until we get a little bit more clarity on if the economy is going to keep trucking on the way we are doing right now.
What do you think is the biggest risk there for the economy to keep tracking the way that we're going now?
Well, one, it's that we are going to see a change in fiscal spending. If that actually happens, as in more cuts, right? Then I think the economy could slow. But this is clearly not a story for this year, as you can tell. We'll keep rolling the shutdowns like rolling blackouts, but it doesn't matter for the market because they know nobody's going to put any type of significant cut into spending until there's a new president in the White House, and that's the big I'd say uncertainty from here. Whomever gets in there, my view on this is it's not political. It's more about how much you're going to cut really, and still try to keep the economy on track, right? And that I think is a big uncertainty.
And it also feels like fiscal is going to come either way. Ben Emmons joins us, Senior Portfolio Manager, Head of Fixed Income at New Edge Wealth. You will definitely be coming back. It was really great to see you're looking at NASDAQ down by about 0.6 of 1%. The Russell 2000 up by 0.6. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Mixed market right now. After another record-breaking session, some of the big tech stocks lower the major averages again. They're mixed right now. Mixed a little change, we'll call it. Some caution in the air ahead of the auction of 30-year bonds that takes place today. Yesterday, the government auction, that was met with kind of lackluster demand. NVIDIA right now, that is dropping some 3.2% after that 7% rally. Tesla extending its sell-off in March on an analyst downgrade. Tesla right now down about 3%. And Bitcoin hovering just below $73,000 per token. We also have news on mortgages. U.S. mortgage rates dropping back below 7% for the first time in about a month. According to the Mortgage Bankers Association, it's 6.84%. The S&P 500, 5 points lower. That's down about 0.1%, 5169 in the index.
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly. We're Monzo. Give us a go. See?
Well, I want a bank that can help me budget for the things I need. Like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
From the UK, and I'm the inventor of the Gel Razor. And today I'm looking for an angel investor to fund my project, the Gel Razor, whether that's a working concept and working prototype, or manufacturing possibilities with investment, or to get me a licensing deal secured. If you go in any supermarket today, you will see packets of razors sold separately with tins of mousse or gel. Hence I did that all in one. The idea is you pressurize the handle. The gel flows through the reservoir up to the head of the razor, coating the blade, ready for shave. My target market is 18 plus, male or female, male blue version, female pink version. What I'm looking for in an investor is someone who's passionate, determined, shares my vision. That's an important step for me, and willing to succeed as I wanted to succeed myself. Patented in the UK in 2021 September. With copyright protection, I have a logo for the Gel Razor, which you will see on my LinkedIn profile. Currently working with a company in the US who have done me a lovely sell sheet. Big up to them guys. So if you're interested, contact me on LinkedIn profile, Paul J. Gwilt, GWILT, or email me at mufc219@gmail.com.
Republicans put forward essentially said, we'll gut the entire thing. And so the messaging is different. And, you know, the reason why we think, and our analysis is out on the terminal, we don't think that there's going to be that much change to the IRA other than specifically some of these EV-related tax credits is because a lot of the money and a lot of the infrastructure that's being built in the United States are going to red states. And so you often see statements from Republicans saying, I supported this initiative. And even President Biden in his State of the Union address last week said, look, if you don't want the money or you want to take credit for it, I'll certainly take the money and take credit for it. So I think there's this disconnect between what's happening in Washington and the markets. I expect that to coalesce if President Trump wins as the markets and especially Wall Street investors become to try and get into his inner ear and so forth, so to speak. But certainly headline risk, and you will see headlines associated with that going up into the election.
Is there any other energy sector? I mean, you did mention energy 3 times as the sector for us to watch.
Because everything in the world is about energy, you guys.
It is.
It's the most important thing in the world. Talking my own book.
Yeah, absolutely. I mean, our energy colleagues, talk about, President Trump loves to talk about clean coal, right? But our energy colleagues will tell you is that, look, the momentum is shifting and that, initiatives to solar and wind and so forth are there. And that's a market focus that the policy place can either step in the way of or try and slow down.
Hey, Nathan.
Yep.
Let me just interrupt you for a second because we have some breaking here. The House now has the votes to pass TikTok divestment bill. The vote is still ongoing, but it looks like we now have the votes. The House has the votes to do this. Okay, what do you think happens from here, Nathan?
Yeah, so, my colleague Matt Shettenham has been fielding a lot of calls all morning about this. And his take is, which I agree with, is that there is momentum right now. You've heard say President Biden said he would sign it, but he also said in the same breath that there could be some changes. The person to watch right now is Senator Maria Cantwell, who is the chairwoman of the Senate Commerce Committee, because if this bill goes to the Senate, as it looks like it's going to be up to her and Senator Chuck Schumer to decide what to do next. Now, Matt has put out a 30% chance of success this year. We don't think that the Senate is actually going to take this up immediately, and I think the momentum behind this bill could effectively kill it. There is just enough, enough discourse or enough disagreement over what exactly the specifics should be that I think a lot of people here want to be seen as being tough on China, but actually don't want to move forth with something that would ban an app that's popular with hundreds of millions of Americans.
Well, I guess one thing that I'd want to know is that, just to bring it back to your election issue, is, how important, let me rephrase that. I'll start again, Alex.
Yes, do it.
I will do it. What do you think is the chances of this vote surviving a Trump administration? Because, he's come out against the idea that TikTok needs to sell itself or get banned.
Yeah, so I think right now the narrative has shifted. Obviously, you had the tough on China President Trump, and now, things have shifted a little bit. I think it could shift again. And so I don't think TikTok is out of the woods, certainly if this doesn't pass this year. So if you get President Biden next year, I would anticipate that policymakers would try again. But I think a lot of it just comes down to the national security operations of the United States government. And what is the DNI, Director of National Intelligence out there saying? What is the CIA Director saying? And I think as time goes on, if this becomes a national security question as opposed to a political question, TikTok could be in trouble. I just don't think it's going to be this year.
Does Chuck Schumer take it to the Senate?
I'm not exactly sure. I'm not confident. I think at the first point is he'll defer, and this is what Matt's analysis is as well, is I think he'll defer to Senator Cantwell and the Senate Commerce Committee. I think she'll have substantial changes, potentially could just make this into a broad social media bill, not specifically directed towards TikTok. But then I think he'll direct it to the committee, see what the committee comes up with, and oops, if it's just too late before the election, we're just going to have to let it sit.
That's an interesting take, because I think I'd really want to know what the read across is for Meta and for YouTube.
Well, our analysis is that obviously this will be good for Meta and YouTube because, if you have Instagram using still, a lot of Instagram influencers will film their TikToks and then just copy and paste it and put it back on Instagram. But if you don't have TikTok, a lot of people will gravitate towards Instagram. But I would also just state that if this bill were to pass, you're going to have a court case.
Yeah.
TikTok is almost certainly going to sue on this, and that court case will probably take years to go through. So even if this bill passes, I'd be highly shocked if TikTok is taken off the app stores by the end of the year.
Does this anecdotally surprise you? Because President Trump did reverse his decision on whether or not TikTok should be banned, and that caused a lot of hubbubaloo over the last couple days. So then there was a theory that maybe House Republicans would side on President Trump's side. So are you surprised that this actually went through?
Yeah, I am. I'm surprised, A, that President Trump changed his mind. And I'm also surprised that House Republicans have really stuck to their guns on this. What I would say, though, is being tough on China is good politics no matter which party you are in. And even though President Trump has changed his tune to a certain extent, he changed it within the parameters of his overall brand. For these House Republicans, it's a little bit different. And so I think they were just more, going to the idea of, I just need to continue to be seen as being tough on China, because if I am seen politically as giving China an opening, then potentially a GOP primary candidate or a, general election in a purple state race or so forth like that, I could be at risk. So I think they're just going back to what they believe, the comfort position, if you will, and they're just going to hope for the best.
All right, Nathan, thanks a lot. Super appreciate it. And thanks for reading that all on the fly for us as well. Nathan Dean, Bloomberg Intelligence Senior Policy Analyst, joining us on all the things. Again, that headline coming that the House has the votes to pass the TikTok divestment bill. The vote, though, is still ongoing. Let's take you now to Michael Barr for world and national news. Michael?
Thank you very much, Alex, Jen, and John. And let's expand more on that, what you just said. The full House has the votes to pass the bill that would ban TikTok unless its Chinese owner ByteDance sells the video sharing app within 6 months. FCC Chief Brendan Carr says he doesn't buy TikTok's promise to wall off American users' data under what's known as Project Texas.
One of the leaked materials had TikTok trust and safety officials themselves saying that it remains to be seen whether product and engineering, meaning Beijing, can still get access to U.S. user data after mitigations like Project Texas are put in place. Second of all, that walling off of data that we just talked about was part of Project Texas. And again, Beijing still got access to it. And even TikTok CEO has said Project Texas will keep data from going to Beijing, except when we allow it pursuant to what they claim are new controls. So Project Texas is about as secure as a sieve at the end of the day.
FCC head Brendan Carr spoke to Bloomberg Surveillance. More breaking news. A judge overseeing the Georgia election interference case has dismissed some of the charges against former President Trump, but others remain. The 6 charges in question have to do with soliciting elected officials to violate the oaths of office. President Joe Biden and former President Donald Trump are now their party's presumptive presidential nominees after yesterday's primaries. On social media, Trump said that he'll celebrate after the November election.
Start thinking about your vote, because this vote is going to be the most important vote you've ever cast.
Meanwhile, a third presidential candidate could play a role as a spoiler. Independent candidate Robert F. Kennedy Jr. says he has selected a running mate, and according to the Washington Post, will make his announcement in 2 weeks. And there's chatter. NFL quarterback Aaron Rodgers is on his short list. President Vladimir Putin says that Russia is ready to use nuclear weapons if there is a threat to Russian statehood, sovereignty, or independence. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Alex, Jen, John?
All right, thank you so much, Michael Barr. Let's stay in politics for a moment, because the other breaking news we had in the last half hour is a judge in Georgia has dismissed some of the counts against former President Trump, trying to understand what that means, particularly how that sets him up going forward. Wendy Benjaminson is Washington senior editor, and she joins us now. Wendy, what does this mean?
Well, it is certainly good news for Donald Trump, and I'm sure he will crow about it and offer it up as proof that these are political persecutions. However, it leaves some of the more serious charges in place. The charges that were dismissed were the charges involving that quote-unquote one of his many perfect phone calls, so quote-unquote, to the Secretary of State of Georgia, the administrator of the elections, who heard Trump say to him, I just need you to find me 11,000 votes. So that the charge was interfering with an elected official or solicitation of, bad acts. So those charges were dismissed. However, there are still these RICO charges. Those are the racketeering and influence corrupt organization charges that prosecutor Fani Willis has charged Trump with, and those charges remain. So he is still in jeopardy of a felony conviction in the state of Georgia. However, this is the same judge who is deciding whether Fani Willis can remain as the prosecutor to, over these allegations of favoring a certain prosecutor that she was dating, the man whom she made special prosecutor. So that's still hanging over her head. The other reason this may not be as great news for Trump as he will undoubtedly post or talk about later today is that the judge said that Fani Willis was free to refile charges in a different way. So clearly there was some technicality we don't know about that led him to dismiss the charges. I'm sure we'll know more later.
Can you give us some sense of the timeline for all of these charges and court cases getting resolved, not just in Georgia but elsewhere?
Well, the hopes of some, particularly Democrats, that this would be resolved before the election are dimming. Now, there is supposed to be jury selection later this month in the New York case over his hush money payments to the porn star Stormy Daniels, whom he allegedly had an affair with. That's supposed to start later this month. Trump is trying to delay it by arguing that they need to wait till the Supreme Court rules on immunity. That may not be till June. So like I said, the chances of these trials all coming to fruition before the election are slim, but they may be in progress on Election Day, which would be just another unprecedented moment in this crazy election year.
Talk about unprecedented, it is now official. The U.S. House passes the bill that would force TikTok sale or potentially face a ban. We will talk about that in just a moment, sort of what advertisers do in that kind of situation. Again, the U.S. passes bill that would force TikTok sale or face a ban as 170 million people cry, particularly teenagers, cry with pain. I do want to get your understanding, Wendy, that what is now the smoking gun case that President Trump is up against, right? Like in all the polling, there is always that one thing. If he's convicted on that, I won't vote for him. Is there a that still?
No, actually there isn't. Our Bloomberg News Morning Consult poll shows that the country, at least swing state voters, who are the crucial voters we're waiting for, are evenly split on whether they would still vote for Trump if he were convicted on any of these charges. If you just ask the question, would you vote for him if he were a convicted felon, 53% said they would not. But when you divide the cases up into the hush money payments for a porn star or overthrowing the government, they feel the same way. They're not seeing these cases as one more important than the other.
All right, Wendy, we appreciate it. Thank you very much for jumping on with us. Wendy Benjaminson is Washington senior editor. All right, now I want to go to frequent TikTok user and BizFlash giver, John Tucker.
Never used it.
Me neither, no.
It's just like,
we're
I'm not a
talking about
tween. Why, anyway. Stocks little changed after the S&P 500 closed at a 17th record high of the year. No notable economic reports due for release today. The central bank in its quiet period ahead of the policy decision next week. Meantime, Winnie Caesar at Credit Suisse says despite yesterday's hotter than expected inflation data, Fed rate cuts are really just around the corner.
When we put the broader picture together, we do feel comfortable that the economic data, while not wholesale cooperative, is inching towards the likelihood of a cut in May and further cuts after that.
Shares of Dollar Tree 14% lower after the discount retailer missed fiscal fourth quarter profit expectations. Delivered a downbeat outlook and said it planned to close a significant number of Family Dollar stores. And Petco Health and Wellness, the stock symbol Wolf, not meow, but Wolf, rising 1%. They posted better than expected sales for the fiscal fourth quarter. And Tesla right now off about 1.9%. Wells Fargo downgraded the stock to underweight. Overall, S&P 500 down just 5 points, a decline of 0.1%, 51.69. The Dow Jones Industrial Average up 126 points. NASDAQ 100 right now down 121 points. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Alex,
Thank you.
You have something to say?
My daughter just really really good animal sounds. So she's going to be in Friday.
Oh,
so,
she'll be here Friday.
So we're going to get her.
Well,
like,
she'll be doing the
rock that
data
little
checks
bit.
for me on
Yeah,
Friday.
she will definitely run away from that. Okay, so back to the news about TikTok. The U.S. House is passing the bill that would force a TikTok sale or face a ban. We want to get a little bit more on this with Daniel Flatley, Bloomberg national security reporter, joining us on this. Daniel, what happens now and kind of what is the victory here on a national security level?
Yeah, I mean, it's a great question. So, like you said, the House just voted a pretty big vote in terms of support for the sale or ban of TikTok. There was a vote of 352 in favor and 65 against. So that gives it some momentum heading into what might be a much murkier path forward in the Senate. We've talked to senators over the last couple of days, and basically they have some concerns, as senators are wont to do, about the speed with which this has passed the House and or moved through the House, and also, is this the right approach? Do we want to target a specific company? So we don't know yet, and the Senate's out today, inconveniently, so we don't know exactly what the path forward will be in that chamber. But Biden has said that he would sign this if it passes Congress. So I think they're moving very quickly at the moment.
Can you made this interesting point that the future of this looks a little bit murky, but can you just remind us what's the national security risk that we're facing, such that we need to have this bill in order for it to be solved?
Yeah, no, it's a great question. So critics of TikTok, national security officials, including most prominently probably the FBI director, Christopher Wray, have long sort of warned about two primary vectors, if you will, of national security threats that could come from TikTok. One is data. The government of China several years ago now passed a law that says any company that was within the Chinese territory could be compelled to give data over to the Chinese government, if they ask for it. So that's one big problem. And then the other big problem is sort of, could TikTok be used in an influence campaign? Could it be used to spread propaganda? All sorts of things like that. Could it be married, potentially some of the data that's collected through TikTok with some other data that the Chinese government has gotten through hacks or other sort of cyber security actions and used to blackmail or bribe people? So it's all of that.
Yeah, that's the one that really makes me nervous. All right, Daniel Flatley, we appreciate it. We know you're quite busy. Bloomberg national security reporter joining us. So the broader question then is, if TikTok is banned here in the U.S., what do you do with your ad dollars? Like, where do they wind up going? One person to go to on this, Seema Shah, Vice President of Research and Insights at Sensor Tower. She joins us now to discuss. Seema also used to work here, and she's really fabulous.
Thank you.
So what happens? I'm an advertiser. What do? Do I just go pile all that money into Instagram?
Well, okay, first, so the best way that we can go about thinking about this is thinking about what happened in India in June of 2020 when India banned TikTok. So essentially what we saw was huge gains for Instagram in particular in terms of active users, but also on an absolute basis for YouTube. And to step up, one step back, the reason is we've seen a huge growth in the popularity of short-form video. Based on our data, users spend about 350 million hours per day on short-form video versus 150 million for social media and less than 15 million for streaming. So it's the popularity of this short-form video, and that's why you saw Instagram roll out Reels, right? So now about over 40% of people's time on Instagram is spent on the Reels portion. So when you're an advertiser, not only do you want to be on the app where people have the most engagement, but you also want to be on the right place on the app. So in Instagram's case, it would be in Reels. And so to think about, so that's how much time people spend on short form video. For TikTok in particular, globally, people spend 78 minutes per day on it compared to 48 for Instagram, and I think it's like 23, sub 30 for Snapchat. So Instagram has a highly engaged audience. It's become increasingly popular with advertisers because it has a younger audience, right? So we've seen ad dollars shift within the United States to TikTok. But Instagram remains popular. So I think that the short answer is you'll see gains in share for Instagram in terms of ad dollars and probably YouTube. Maybe less so Facebook because Instagram still has a younger audience than Facebook. But I think that is the biggest repercussion. But for TikTok itself, the US is 10% of their active users, 20% of their in-app revenue. and they've been growing their advertising business in the U.S. and probably globally. So, on an absolute basis, this would be a blow to them and symbolic because if it happened in the U.S., it could be copied in Western Europe as well.
Yeah, I had absolutely no idea that the proportion of people watching short-form video versus social media was so skewed that way.
Yes.
But let me ask you a question from the point of view of an advertiser. Yeah. So this is all about, well, where are advertisers going to put their money?
Yeah.
But can you take a step back for me and give me a picture of how popular is social media short-form video spending versus other types of spending, billboards, whatever, magazine ads?
So our data focuses on digital advertising.
Just digital,
But
okay.
digital is growing because that's where a greater portion of people's attention is. And particularly within apps, right? Because time on apps and you're kind of trapped. You're looking at the ad, right? So if they place it on your feed or in your reels, you don't really have a choice but to see it. And because apps like Instagram and TikTok know so much about their user, they can target their ads, right? So they can tell their advertisers, look, our audience is this, we're gonna show your ad here, where these people will see it. So I don't have the breakdown of digital versus traditional, but certainly digital is growing at a much, much faster rate, and particularly in the mobile space.
I mean, this is a very appealing business model with a lot of growth. So would it be easy for another company to buy TikTok then, based on all these users, all this ad revenue, and the growing platform?
Assuming they could just buy TikTok as is without any other changes, it would be a huge gain for somebody who's trying to grow in this space, right? Because it's really hard now to grow users. Instagram is growing users. TikTok has seen a deceleration in the growth rate. It's still positive. And then apps like Snapchat are seeing growth internationally, but that's because they haven't been there before. But for the most part, similar to streaming, it's the apps are very saturated, right, in terms of downloads. So you have to think of what can you do to drive that engagement, right? And so Reels and then obviously TikTok have been able to get that attention and drive that engagement. So if you're somebody who wants to be in this space and you're not owned by a Chinese company, this would be a great opportunity for you to get into this.
Real quick, this is the trick question, or the billion-dollar question, rather. Who would be a potential buyer? Do you have any thoughts on that?
I've heard news of a lot of different companies buying it. I mean, I think it would depend also on regulation. I mean, clearly one of the existing social media platforms may want to buy them. I don't think Meta platforms would be allowed to do so, but then you have someone like a Snap or even smaller ones like Pinterest. If they were able to finance such a purchase, that would certainly push them way up in terms of active users, engagement, and understanding the audience even better because they'd have that many more users to analyze.
Seema, it's so great to see you. Amazing analysis and stats. Seema Shah, Vice President of Research and Insights over at Sensor Tower, giving us the lay of the land on what's up next for TikTok as the House does pass the bill to either ban it or spin it off. Does it go to the Senate is really now the question. This is Bloomberg.
your company news headlines on Bloomberg Radio.
And I'm John Tucker. We'll look at some of the company stories we're following. Let's start off with the breaking news on TikTok. Well, the CEO at TikTok, he went to Capitol Hill to try to lobby against the bill that's going to force the app's Chinese parent to sell it or face a ban in the U.S. Joined by influencers, he sought to persuade senators to reject the legislation. And, of course, as we heard in the past few minutes, that has passed the House. Meantime, Senator John Fetterman, the Democrat from Pennsylvania, said he was among those contacted by TikTok, and he's told them they were wasting their time. So he goes on to say, I've spent hundreds of dollars on Drunk Elephant at Sephora because of my tween. No idea what that is.
Okay, Drunk Elephant is actually quite nice.
Okay, it's a skincare brand.
It's a skincare brand.
So
Invest
it's
in your
gone
face, Tucker.
viral on the app, and all the tweens are at Sephora, including Fetterman's daughter. He says it's annoying, but I think there's also a national security issue here as well. So he's going to vote against it in the Senate, at least. This is a serious one, and we'll update this from yesterday. Doctors across the U.S. stretching to keep their practices afloat. There's a debilitating cyber attack we told you about on a once little-known company at the center of the healthcare system. That continues to cause havoc. The February 21st attack against Change Healthcare, a subsidiary of the largest U.S. health insurer by market value, United Health Group, has seized the healthcare system for 3 weeks and counting, halting the normal flow of billions of dollars in payments between doctors, hospitals, pharmacies, and insurers. The paralysis is also tilting some clinics into possible financial peril. And that's a look at some of the company stories we're following. I'm John Tucker.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Wednesday, everybody. I'm Alex Steele in our Interactive Broker studio right here in Midtown Manhattan with Jen Ryan. Paul Sweeney is off today. You're listening to the Bloomberg Intelligence radio show. We're going to give you now the world and national news with Michael Barr. Michael?
Thank you very much, Alex, Jen, and John. And as John just mentioned, this morning, House lawmakers voted to pass a bill that could lead to a national ban on TikTok. The bill, which had bipartisan support, would force TikTok's Chinese parent company, ByteDance, to sell the platform or else face a total ban here. Republican Representative Dan Crenshaw.
Let me explain this really simple. TikTok is owned by ByteDance. ByteDance is in China, and when you're in China, you have to do whatever the Chinese Communist Party says you have to do. That's according to the national intelligence law passed in 2017. If they want you to spy for them, you will spy for them. That's how that works. They have a board member from the Chinese Communist Party on ByteDance.
The bill now heads to the Senate. President Biden and former President Trump are both officially presumptive nominees after the latest primaries and caucuses. Bloomberg Government's Jonathan Tamari has more from Washington.
They now have the delegates that they officially need to formally secure the nominations at their conventions later this summer, but we know the matchup, and it really sets up a very long, very expensive, and potentially kind of miserable campaign season. You've got two candidates that are very unpopular for very, very different reasons. It's a rematch that we just saw 4 years ago, which is very rare. And it could be a really nasty race, just given the negativity around both candidates.
Bloomberg Government's Jonathan Tamari. The judge overseeing the Georgia election interference case dismissed some of the charges against former President Trump, but many other counts in the indictment remain. The 6 charges in question have to do with soliciting elected officials to violate their oaths of office. Bloomberg's Wendy Benjaminson, senior editor in Washington, was asked about the timeline of these cases, possibly around the election.
The chances of these trials all coming to fruition before the election are slim, but they may be in progress on Election Day, which would be just another unprecedented moment in this crazy election year.
Bloomberg's Wendy Benjaminson, senior editor in Washington. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Alex, Jen, John?
All right. Thank you so much, Michael Barr. We appreciate it. So here's a fun piece, Jen, that you highlighted for me. It comes from our Bloomberg Opinion columnist, Adrian Woolridge. And the title is, "Overwork, in quotes, epidemic is a dangerous illusion." And the whole idea is, are we actually working too much? Or is that just something we made up? And that actually we're doing just fine?
Well, you would think that we're all working until we drop, because there are so many books and podcasts and magazine articles about how to win back your time from your employer. But what's interesting about this article is that, or this opinion column, I should say, is that he actually digs in and looks at how much we are actually working. And there was a very
Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that I start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
Welcome to the digital age. Are you struggling to stand out here? Don't worry, meet Blue TV, who is your digital superhero.
Blue TV is a multi-purpose online media network that also provides digital marketing services. We are based in Islamabad, Pakistan. We are expert in creative marketing, social media and digital marketing, search engine optimization, web design, page rank, and SERPs, video editing, recording and production.
So, what are you waiting for? Pick up the phone and call or WhatsApp Blue TV on given number, or visit our Facebook page at facebook.com/blue.online.tv.
With Blue TV, your business growth will be skyrocketed.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See? I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo. We can do that. Bingo's my cockapoo. Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
My general advice is continue to seek out companies or people that are maybe one stage or two stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down that path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to like build a path towards that. Almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So it's strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
Down 15%. And we're going to call this the headline of the day. Dollar Tree eyes wealthier shoppers with prices as high as $7. They're entering their fancy era, apparently, at Dollar Tree.
I feel like there's a lot to digest in that sentence. I don't know. I think they'd actually have to stock products on their shelves to do that, but
yeah,
okay.
Well,
$7 store. $10 store? Can you do that? I don't think so.
Just $7 for wealthier shoppers.
Okay, or just go to Target. Anyway, Jen Ryan joins me for the week. Paul Sweeney is off this week. Jen, do you use TikTok? Are you a TikTok person?
I do not, but I have a lot of relatives who do, and they're all below the age of 20.
Yeah, really? See, I would totally go on TikTok to watch like John Tucker on TikTok renovating his bathroom.
I'd pay money to see that.
Yeah, that's a yeah. And Alex says I should turn it into a closet, not a bathroom, but.
That is a debate that could
story for
unfold
another
in
day.
TikTok.
But where are the influencers going? They must all be upset, are they not?
I don't know. You're asking me? I have no idea. I'll ask my daughter. We can ask her on Friday.
Okay.
Not that she's on TikTok, but maybe she knows who the cool kids are.
Okay.
Where's Taylor Swift going? That would be the indicator.
I can't wait.
Okay. All right, let's get more on the markets here. Market's pretty mixed. It's really tech that's taking the brunt, but honestly, we're just down by 0.5% on the NASDAQ. Abigail Doodle is here to break it down. What are you watching? What's top most of mind?
I'm watching the stocks because we do have, as John mentioned, the NVIDIA down. That's the biggest drag on the S&P 500 right now, down 2.9%. But the stocks, there's a big sympathy trade because that index is down 2.1%, but all of its members, all 30 members, are lower. Interesting is the fact that AMD is actually the worst drag on that index, from a point and a percentage standpoint. It's down 4%. And to the best of my ability to determine, I think it's just in sympathy with NVIDIA, the AI craze, those two stocks selling off with each other. So it's just interesting to see this breather here for the supercharged rally.
So who's in favor if it's not going to be the supercharged tech industry?
Well, Alex was making the point last hour that small cap is outperforming, and that is certainly true. We have that Russell 2000 up 0.3%, so a 2.3% spread between tech and the Russell 2000, so a bit of a rotation there. We also have, this is interesting because over the last couple of years, there's been a divergence between U.S. stocks and China stocks, but we do have the NASDAQ Golden Dragon Tech Index up 2.1% today, up for a fourth day in a row, up about 8% over that time period. I generally, as somebody who loves charts, hate when people will just simply give the explanation for a market of it's technically driven, but that NASDAQ Golden Dragon Index, it really does apply right now because for really no reason over the last 4 days, it's shot above its 50-day moving average, the near-term buyers, then the 100-day moving average, medium term, and then right now it's above the 200-day moving average, so everybody wants back in. The question is there something going on in China that can compel investors to take it above what's basically a range?
What do you think is going to be the next catalyst? It's really hard to say, isn't it?
It is. I mean, if PPI somehow comes in shockingly good or bad, as in good lower or bad much higher, that could be a catalyst for some kind of a directional move to break this stalemate. Because I would say, and I'm looking at NVIDIA right now, it looks as though it is going to break to the downside. That said, it's hard to. It's in what's called a diamond top pattern. It's basically people frothy trading reversing very quickly. The reversal hasn't happened. If that happens, if it's just NVIDIA selling, that in and of itself could be a sentiment reversal for investors. Could also be the Fed next week. Sometimes, though, these catalysts, we don't know them until they happen. Sort of like trying to call a top or a bottom. It's a tough thing to do, but then after the fact, it's like, oh, okay, that was what happened.
Before we get to the Fed, there is one thing I wanted to ask you about the Bank of Japan, because they could be exiting negative interest rates finally. And I wondered if you had any thought about what that knock-on effect could be for American markets.
Well, it's interesting if that does, in fact, happen, because they, of course, as we all know, is the last holdout. In terms of my quick way of looking at it is probably everybody's quick way of looking at
dollar
it is
yen.
Yeah, of course, dollar yen, and it appears that it's topping. I mean, speaking of another technical pattern, it appears that it's in a double. It could be in a potential double top. We wouldn't know until it potentially goes back below 140. But if it is, it's a perfect pattern, because the high put in last November around 151, the second high not quite as high, telling you that the buyers who bought it up from 140 until above 150 this year, that they didn't have quite as much enthusiasm. We could see a big break to the downside, meaning 130. I would say that it's likely they're just looking at this chart very quickly. It looks like we could go to 130, which tells us that that would be supported by the idea that the Bank of Japan, BOJ, might in fact join the hiking camp, supporting their currency, that the yen is going to be going higher, so the dollar yen will be going lower. But what makes it interesting is it also appears as though the dollar could be going higher. So if you have two haven currencies going higher at the same time, maybe something else is going to enter the picture.
Yeah, well, also then the Nikkei's done so well.
So
if you get to
well.
130, like that has to pressure equity investments there.
I don't disagree.
Abigail, great stuff. Really appreciate it. Thank you so much, Abigail Doolittle, joining us from Bloomberg TV on all things market. So here's an amazing big take story that we wanted to talk about. The title is How a Physics Whiz Made a Fortune Betting on Nature's Catastrophes. And you can access this story on the terminal on Bloomberg and also Bloomberg.com/bigtake. We do one every day, and it's a chance to go deep into the headlines here, some of the underlying trends within the market. So let's go to the author now. Gautam Nick, Bloomberg Senior Editor, ESG Investing, joins us now. Gautam, walk us through what this article is. It basically feels like making money off of disasters.
Well, yes, on the face of it, I'd say that's probably what it is, but it's a bit more layered than that. So it has to do with insurance. So traditional insurance and reinsurance, do a fairly good job of covering modest and medium-sized catastrophes, storms and hurricanes and earthquakes. But every 30, 50, 100 years, you get a Hurricane Katrina-like event, which is completely devastating in its scope. And that's the kind of event that traditional insurance company can't really handle. So they've turned to a new type of asset class. Well, it's not new, it's been around for 25 years, but it's really coming into its own more and more now. And it's called catastrophe bonds. And the way it works is that instead of the insurance company taking the risk should a disaster happen, that risk is passed on to Wall Street investors. So if the disaster does happen, the Wall Street investors can lose some or all of their money. So it's a pretty risky move. But if it doesn't happen, and these bonds are only, they run for only 3 to 5 years, not for much longer. If the disaster doesn't occur, then the investor gets to keep its original capital, plus gets a hefty return on top of that for taking that risk.
So your story, it's fascinating, and there's so much to dig into there, but you start off taking a look at Fermat Capital Management, and this is the owner of the world's biggest collection of catastrophe bonds. Can you talk a little bit about their strategy? And in particular, I just want to circle back to a comment that you made just now, that in this current environment, this market is very, very interesting, and I wonder if you could talk about how a warming planet is figuring into Fermat's strategy.
Sure. So, there are always hurricanes and earthquakes, but the problem is that more and more people are moving to Florida and California and other parts of coastal regions in the world where, they want to have a nice view and a nice seaside experience, but those expensive homes they're building, when they get hit by a storm, they, tend to lose a lot of money. So that is the real problem, is that human beings are moving to these risky areas, and the insurance industries, either in some places like California and Florida, walking away from it. They're not going to insure people, the risks are too high, or they're turning to kind of instruments like a catastrophe bond to do so. So Fermat Capital is the world's biggest cat bond investor. Their assets are about $10 billion, and they have a very interesting strategy. So like other cat bond investors, they do buy these risk models which help you to predict the likelihood of a hurricane occurring in a particular year or over 2-3 years. But what they do is they add a magic sauce, that because the co-founder of this firm, John So, has a physics background, he has a biophysics degree from Harvard. He's been able to layer an extra sophistication in trying to predict the likelihood of risk and return for each of these potential catastrophes. So his buying approach is quite clever and sophisticated, and he hopes to get an edge from that. So that's where Fermat has really, they've been involved in this market almost since its inception, and they use this extra edge to try and beat the market and other cat bond investors.
And has it worked? What are the returns like?
Yeah, so the returns last year, which was a very good year for all investors, about 20%. And I think a lot of other investors also came in at that level. I should say that the interesting thing about cat bonds, it's a really good diversifier. So, unlike your regular, stocks or bonds that fluctuate with market movements or the Federal Reserve's decisions, a catastrophe bond's outcome is down to Mother Nature. Either she's kind or she's unkind. And if you diversify a portfolio with cat bonds, and you get the benefits of that, it's a really good diversifier that has no correlation with the rest of the financial markets.
Can you talk a little bit about how the current environment in the insurance market is affecting Fermet's returns? Because you make the point in the story that a lot of insurers are charging more to protect customers from devastating weather.
Well, last year was a record year for the issuance of catastrophe bonds, and this year is looking likely it's going to be, again, a pretty solid year. And that reflects the insurance industry's desperate need to pass on some of this risk beyond the traditional reinsurance industry to Wall Street. Wall Street is a huge, deep pocket with lots of trillions of dollars at its disposal, a lot of, risk-taking investors, unlike traditional insurance, which is a lot more conservative. So as you can see from just the number of new issuances that are lined up for 2024, that insurers are increasingly turning to this market. So one of the issues, a problem, is that secondary perils, as the industry likes to call it, so floods, wildfires, and thunderstorms, are causing more and more insurance damage as opposed to, a Hurricane Ian or Hurricane Katrina-like event. And insurers are trying to figure out how can they protect their own portfolios, their own balance sheets, but also provide insurance to people. When you have more of these type of events occurring, this sort of medium-sized $5-10 billion disasters versus the once in a 30-year event, and at the same time try to make sure that their balance sheet is protected.
Mm-hmm.
That's not so easy to do because we don't have much data on these kind of secondary perils. And also the models that are used that give an investor some certainty that, okay, they don't stand to lose. Typically a rare hurricane, the loss estimate is somewhere in the region of 2%. It's fairly low. The return you can get is something like 8-9%.
Mm-hmm.
So as long as that clarity isn't there for these tornadoes, thunderstorms, ice storms that you see in Texas, as long as that's happening, the insurance industry is going to find it difficult to access the cat bond market to cover those kind of perils, which are becoming more common.
Gautam, what are the main risk events that now a CEO is modeling that may or may not happen? Because he basically has to model what he thinks will happen and then either take a little bit more risk but for more reward or avoid that altogether. Well, what are the things that he's seeing right now?
Well, they own something like 250 or 280 individual catastrophe bonds, and the whole market maybe has 320 or so. These are rough figures. So they are very dominant. They own a vast swath of this whole market. That could include a tsunami cat bond for Japan, a typhoon cat bond for the Philippines, a hurricane cat bond for Mexico, all kinds of different events. So I think their modeling is primarily focused still on the big potential disasters, such as hurricanes or an earthquake in California or wildfires in California, and less so on things like thunderstorms, because again, they don't really have the data or the sophisticated models yet. But they're building up that because that's where the catastrophe bond market is going to grow. It's going to move away from the kind of Hurricane Katrina-like events, the rarer big disaster events, and more to Hurricane Sandy-like event, which there is a cat bond for. The New York subway system has acquired a $100 million cat bond. I think they've renewed it perhaps for the third time now to protect the subways from going underwater should a Hurricane Sandy-like event hit the city head on.
We have very little time left. Just in 30 seconds, can you tell us what's the next big move in catastrophe bonds?
Well, I think it's just going to grow. There's a lot more catastrophes that are going to be covered. I think some of the secondary perils like flood and wildfires in particular, there's more sophisticated modeling available from certain modeling companies. Also, there's more data. And so I think that's where the cat bond market is going to grow, not towards the huge rare disasters, but more of the commoner medium-sized disasters.
All right, Gautam, thanks a lot. Thank you so much. Gautam Naik, he joins us. Bloomberg Senior Editor, ESG Investing. Again, a great big take, and you can check that on the terminal or at bloomberg.com/big take. Looking at a market here that is again decidedly mixed. The NASDAQ is off by about 0.5%, volume a little light. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash being brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. A bit of caution in the risk markets. Investors waiting to see the results of the auction of the 30-year government debt. NVIDIA right now weighing on the markets, down 2.6% for NVIDIA, and 3M, that's actually helping lift the Dow. They're raising the first quarter earnings outlook. Another analyst warning about risk to sales at Tesla. Those shares right now are down just about 3%. Overall, the S&P 500 3 points lower at 51.72 after yesterday's record close. The Dow Jones Industrial Average up 177 points. That's up 0.5%. The Nasdaq 100 is 126 points lower. That is down about 0.7%. As for Treasuries, the 2-year yield right now 1 basis point higher. That is at 4.60. The 10-year 2 basis points higher. That is at 4.17. Oh yeah, Bitcoin, 72,908 per token. So that's up about 3%, right around that 73,000 level. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Jen and Alex.
All right, John Tucker, thank you very much. This is going to be a segment that is near and dear to Jen Ryan's heart because you are looking to buy a home right now.
I am, and it is very, very painful, and I'm going to share that pain with you over the course of the rest of the week.
Yes, I love housing pain. I mean, not for you. I hate that for you, but I love it as a story.
Yeah, and it is just absolutely shocking. We're first-time buyers, and we are amazed at how disorganized and opaque this market is.
How interesting. Is it the price? Is it the mortgage? Is it the supply? What was the hardest part?
It's all so hard. It's just hard to pick a favorite child here.
Oh, wow. Okay, well, this leads us perfectly into our next segment. So Lennar is reporting today after the closing bell. You're looking at adjusted earnings estimate of about $2.21 for the first quarter. You're looking at revenue estimates of about $7.42 billion. So nobody else better to talk to than Drew Redding, Bloomberg Intelligence U.S. home building analyst. Hey, Drew, is Jen going to feel better after Lennar reports? I mean, I appreciate that she's looking in Queens, but still.
Well, if she's looking for a new home, she'll probably fare a little bit better than something in the resale market. And it goes back to some of those things we've discussed in the past. There's not a whole lot of inventory in the resale market. And at the same time, builders have been able to buy down mortgage rates. So they're making the financing costs a lot more attractive for home shoppers, which are just not able to get in the resale market.
Yeah, I mean, talking about getting into the market, what's the incentive for me at this point? Because I feel like I'm sitting there, rates are still pretty high. There's not a lot of supply shuffling around. Like, where's my in?
Yeah, it's tough. And as I mentioned, in the resale market, things are particularly challenging. And we've been describing housing, for the better part of a year and a half as a tale of two markets. So you've got the resale market where costs are higher, inventory is lower, and you've got the new home market where builders have been able to expand their community counts. They're purchasing land, they're growing their inventory bases, and at the same time, they're making the financing costs a lot more attractive. So the competitive dynamics have favored the builders for the last year and a half, and we think that continues through 2024.
Has Lennar stock already run up enough that anything is sort of like the law of good numbers? Like, no way the stock's going to rally after earnings.
Yeah, good question. I mean, since the beginning of November, the builder stocks have been on a tear, along with much of the market. And I think it speaks to that competitive dynamic that have favored the builders. Intuitively, when mortgage rates are rising, interest rates are higher, that's not typically when you think about investing in the home builders. But I think that the dynamics have changed so much for them that there's been a lot more interest in the group. Now, if you look at where they're trading relative to book values over the last couple of months, they've certainly come back more in line with what you'd expect based on future returns on equity. It's interesting, though, if you look at some of the smaller and mid-cap builders, there's still a little bit of a disconnect between, expected earnings and what they're currently trading at. One of the things that I think is real interesting within the group is kind of, the drumbeat has started to get a little bit louder, and we've heard some CEOs come out and speak in favor of this, as you would expect, that builders have made a case that their stock should be graded higher.
What?
And
that's so weird.
There has there has been a precedent for this in the past in the case of MVR, and the argument is that the business models have changed so much. One, you've got businesses which are shifting to more asset light, so they're not holding as much land on their balance sheets. They're operating with historically low leverage, and they're becoming more systematic in their repurchase of shares because they're generating so much cash. So it does bear watching, as we get through this year and into next, if investors are willing to underwrite these changes in the business model as kind of a longer term thing.
Can you talk a little bit about how that willingness is going to intersect with changes in what the outlook is for Fed policy? Because after yesterday's CPI print, we're sort of wondering how many rate cuts we're going to get this year.
Yeah, it's a good question. And, a lot of the builder stock performance, and you look back to late October, early November, has been predicated upon what's happening with the Fed. When there was a lot of enthusiasm that the Fed was going to start cutting maybe in 1Q and there's going to be several cuts throughout the year, I think that's when you saw the stocks really start to take off. And I think what you need to see now from the builders in terms of an investment is, are lower rates going to actually show tangible benefits to the fundamentals? So one of the things that we're looking at specifically is gross margins. As we discussed, builders have been offering financing incentives, and that obviously comes out of their profitability. But I think, a lot of the enthusiasm stems from the fact that with lower rates, builders don't have to be as aggressive in offering incentives. So I think there's a thought out there that margins should rise throughout the year. So that's what we're going to be looking at is, has this modest pullback in rates from 8 to somewhere around 7 right now enabled them to kind of dial back a little bit?
I mean, I gotta say, this is totally anecdotal, but like, I am addicted to Zillow and I'm addicted to Street Easy. I love it for fun. I'm not looking to move. But I gotta say, I'm noticing things getting like snapped up in like 32 days, 36 days, despite the fact that the 30-year is still pretty sticky. I'm like,
but those are existing homes. It's like, is there enough available land for the builders out there?
Well, I mean, they're building up a ton in downtown Brooklyn. I mean, again, purely anecdotal, just talking about Brooklyn.
Well, like buying up housing and tearing it down and putting up.
There's so many new complexes that are coming up. It's insane, and things are going. I mean, it feels. I actually really wonder if that 8%, 7%, 6% hurdle is as much of a hurdle as we thought, Drew.
Yeah, that's a great point. And I think so. We've been dealing with mortgage rates that are above 6% for more than a year and a half now. So I think as we start to get through this year, I think you have buyers coming into the market who are coming in with a better understanding of what their costs are going to be. Maybe they have to make an adjustment on the particular house they're buying. Maybe they're making a concession on the square footage of the home. But I think they have a better understanding of what their costs are going to be. And you have to remember, even though home sales are down significantly from 2021, we're still selling about 4 million single-family existing homes on an annualized basis. So there are still transactions, and as that continues, it starts to loosen up that mortgage rate lock-in effect, because you've had people who are buying at 6, 7, 8% rates who aren't going to be impacted by that in the next couple of years.
Going back to the search for among home builders for margins to rise, can you talk a little bit about what their cost pressures are like? Because what I really want to know is ultimately, how is this feeding into the inflation picture?
Yeah, so, and speaking to Lennar specifically, they mentioned during their last quarter that their construction costs were down double digits from the prior year. So there has been a little bit of relief on the construction cost side. The expectation is that things will stabilize as we get through the remainder of the year. I think the one particular challenge for the builders that, has become more of a concern is the cost of land. Builders bought up a lot of land during the pandemic. A lot of it was lower priced. And as we're doing higher volumes in the industry, builders are starting to cycle through that lower cost land. And now the stuff that they're delivering now and, through 2024 and into next year is going to carry a higher cost land base. So there's going to kind of be a give and take between higher cost land and what they're able to do from a pricing perspective. What we've seen now, interestingly, is that builders have seen a little bit of pricing power on a like-for-like basis. So you will see average selling prices for many builders in the group start to come down. A lot of that has to do with where they're building or the type of product they're building. So there's been a shift to smaller square footage houses. But for that same square footage house, builders have been able to raise prices in many of their communities.
So, okay, so just to recap, we're watching concessions. We're watching house prices, right? Input costs and anything they say about higher cost land. Am I summing you up right?
Yeah, the other thing specifically for Lennar is they're going to be the first builder to report with the month of February, when we did see rates move up from, this called the 6.5% to 7% range. So we do want to see kind of the cadence of orders throughout the quarter, and if that increase in rate did have an impact.
Real quick, we're just about wrapping up here, 30 seconds. Do you see any election year issues that we should know about for the home builders?
Well, you did have, which was interesting during the State of the Union, the administration came out and they kind of emphasized housing as a key concern and something that they wanted to focus on. I think you'll continue to see that kind of dialogue happening, but I think what they've discussed is kind of throwing money at it from the demand side, which we think ultimately ends up being inflationary. We think that in order from a policy perspective, you need to find a way to address housing from the supply side.
Yeah, 100%. That makes such good sense. More supply, prices come down, end of story, rather than make it easier to buy, in essence. Hey, great stuff. Really appreciate it, Drew. Thank you. Drew Redding, Bloomberg Intelligence U.S. home building analyst. Is there like a interest rate you want? Like, is it 7? Is it a 7 handle? Like, are you thinking like that?
I want.
Oh, she's all cash. What are you kidding?
Okay, if you weren't all cash, is there? I mean, like, what would be?
There's the rate I want, and then there's the rate I'm going to get. I mean, we have to be realistic here.
Yeah.
You know, should I have bought during the pandemic? Probably.
I don't want to tell you what my rate is.
I don't want to know. I really don't. Yeah, tell me.
Let's go to Michael Barr.
Thank you very much, Alex, Jen, and John. The full House, they passed a bill that would ban TikTok unless its Chinese owner, ByteDance, sells the video sharing app within 6 months. The lawmakers contend ByteDance is beholden to the Chinese government, which can demand access to the data of TikTok's consumers in the U.S. Republican Representative Chip Roy of Texas.
The bill does not violate the First Amendment. It focuses on conduct, not content. It requires both being controlled by a foreign adversary and conduct that itself is espionage.
TikTok denies it could be used as a Chinese government tool. The bill still has a long way to go in the Senate. President Biden is heading back on the campaign trail to Milwaukee, Wisconsin today after clinching the Democratic nomination in last night's primaries. Former President Trump became the presumptive GOP nominee as well, raising the question who will be his vice presidential nominee. Bloomberg's Mike Shepard reports one running mate you're not likely to see is Nikki Haley.
They had a bitter campaign, but there are a lot of other interesting names out there. If you're Donald Trump, you will want to make every bit of this moment in the search for a running mate, and I would expect him to try to build the momentum and build the suspense and get as many of these prospective contenders down to meet with him, maybe even in public settings at Mar-a-Lago in coming weeks.
Bloomberg's Mike Shepard. The judge overseeing the Georgia election interference case has dismissed some of the charges against former President Trump, but others remain. The 6 charges in question have to do with soliciting elected officials to violate their oaths of office. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Equities struggling for the most part to gain some traction today. Stocks retreating from their all-time highs, at least the S&P 500. Some of the big tech names weighing on the rest of the market. NVIDIA slipping 3%. Tesla extending its March sell-off. You had an analyst downgrade there. Traders also waiting to see the results of the Treasury auction. They're selling 30-year bonds today. Now, the Dow Jones Industrial Average, that's kind of the outlier. It's up 157 points. That's a rise of 0.4%. 39,161 on the index. So if that keeps up, the Dow will close at a record today. Meantime, Brent Schutte, CEO at Northwestern Mutual, says he sees big changes on the way for markets.
My biggest worry right now is that people are concentrating in yesterday's winners. I think you're at the end of an economic cycle. At the end of an economic cycle, you want to behave better and you want to stay diversified because every economic cycle has had different leadership. And I think the next economic cycle, after we get past a recession, which I still think is likely, will have different leadership once again.
And the Fed meets next week. Traders pricing a rate cut at the June meeting, despite yesterday's hotter than expected CPI. Tomorrow, the day is going to include PPI, retail sales, initial jobless claims, as well as business inventories. S&P 500 right now, 8 points lower. That's down just about 0.2%. And the NASDAQ 100 down 170 points. That is down 0.9%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Jen and Alex.
Thank you so much, John Tucker.
You're so very welcome.
Here's the fun thing. It's the T+2, T+1. Who knows what that means?
It used to be T+3. So you buy a stock and it actually doesn't settle for, it used to be 3 days, then it was 2 days, now it's coming up on, well, what is it now, 1 day?
It's going to be 1 day.
That's the proposal, is 1 day.
And it's going to cost lots of people who do the plumbing stuff, going to cost them lots of money, I think.
Well, let's get to that, because apparently
I thought you were like asking me.
More than 30, no, you're setting me up, man, that you could cost more than $30 billion a year, and this comes from a new report from Bloomberg Intelligence. Resulting impact could be about $24 billion in securities lending costs and about $6.2 billion in added costs, particularly for at the FX guys. The man behind the report is Larry Tabb, Bloomberg Intelligence head of market structure research. He is the voice in market structure, and Bloomberg Intelligence is so lucky to have him. Larry, how did you get to this number?
Yeah, a lot of estimates, and I'm not sure I would be betting on the $30 billion number. That said, someone needs to put out how this T+1 is going to impact individual investors, and we broke it into basically 5 different parts. First, FX. So if you're in Europe or if you're in Asia, currencies take 2 days to settle, but your securities trades settle in 1 day. So what's going to happen? How are we going to get cash from Japan to the U.S. when everybody's closed and CLS works? The currency settlement system works in 2 days. So that's a portion. A portion of it is the allocation confirmation process, which really kind of gets into the weeds. But by and large, when big mutual fund and asset managers trade, they aggregate their orders from different portfolio managers, and then that goes to brokers who split those transactions up into little tiny pieces. And how the asset manager provides equity in that is they average everything up and they give everybody the same price. And that takes a lot of time. And DTCC came out with a piece basically saying that that right now, roughly 30% of transactions will not meet the deadline, which means they will probably fail the next day. So there's a financing cost around that. There's corporate actions problems, basically like when there's name changes and dividends and things like that. That will become a little bit more problematic. And then there's sec lending issues, which means that a lot of asset managers' portfolios are out on loan. So how the question of getting those securities back in time to make settlement for the next day, without leaking information, to the person who actually borrowed them, who's already short that. So that could be very problematic, letting the people who are actually short know that, hey, look, there's going to be more sales coming, the next day. So there's a lot of different issues around, lending and borrowing and financing a lot of this, not even taking into consideration all the technology and operational issues.
Sec lending, that's what the cool kids call it, apparently. I was like, wait, what? And then I got it. Security lending. Shorting.
Securities lending.
There we go. Sec
Shorting,
lending, Jen. That's
Sec
the
lending.
cool kids, yep.
Okay, note to self, sec lending. Anyway, can you tell us a little bit about when this is all coming down the pipe? Because this 30% of transactions not meeting the deadline, that's kind of worrying. So if this is coming soon, I think we all need to get ready.
Well, it's not 30% of all transactions. It's 30% of a lot of the big buy-side guys' transactions. So it's still a lot of volume, but it's not 30% of everything. It's coming down the pike on May 28th. So it's literally 2 months and a couple of days away. And it's going to be coming down the pike soon. The other actually big, not big thing, but things that you will hear, especially in the Twitter and Reddit world, is a lot of conspiracy theories. So the fail numbers, which go back to meme stock and AMC and GameStop and a lot of the crazy stuff that goes on in Reddit and Twitter. The fail number is going to go up. There's just going to be one less day to make sure that everything settles properly, and especially with sec lending and all this other stuff, there's just going to be a lot more things that don't make it across the line in time. And so all those guys are going to say, oh, there must be conspiracy theories. There's all these naked shorts running around, which is not true. It's just a lot of guys and computers in the back office trying to make sure that everything just gets done.
So Larry, if I'm going to trade on E-Trade or something, which I don't, but if I did, how do I see the difference?
For retail folks, there's not going to be a whole lot of issues because to a certain extent, E-Trade really won't let you trade if you don't have cash in your account or you don't have enough margin in your account already. In fact, it might actually be a little better. You'll get your cash a day quicker. You'll get your securities a day quicker if you buy. The retail side won't be that impacted, except on when you start aggregating all those retail positions, they actually lend a lot of that out, and so the brokerage's back office and custodians may have some challenges and issues, with lending and getting things back in time. But by and large, it's not going to be a big deal for retail. It's really more the big asset managers, hedge funds, and folks like that are going to have this issue.
You mentioned in your story about this in your notes that this is meant to solve a very important problem, the potential of failure between the time a transaction is concluded and it settles. I mean, how important is that problem to get solved, and will this proposal solve it?
Well, let's go back to January 2021. The whole GameStop thing. I don't know if you saw the movie Dumb Money. That whole thing. At the end of that day, Robinhood got a call to say, hey, look, you've got so many buys on Robinhood. We're not sure we can settle all this so we want you to write us a check or send us $3 billion. And that's not probably a call you want to get at 2:00 in the morning. So if the settlement process is 1 day shorter, that theoretically that exposure gets cut in half, because in effect what you're guaranteeing for is that for the stuff you buy, you can cough up the money in 2 days, and if you only have to cough up the money in 1 day, then the risk of someone going bust in those 2 days is shortened by half.
Yeah.
So now it might not exactly be half, but it's about half. So that risk goes down, but that risk then gets pushed back, especially to institutional investors who have a lot of their cash. See, with retail investors, their cash is at the broker, whereas institutional cash and securities are at a custodian or a prime broker. So there's another hop in that leg. So it's not like the Goldman Sachs, when it gets an order from some large asset manager, has the cash lying around. It's got to go to State Street or a bank in New York or Northern Trust or something to get that money.
Larry, we got to leave it there, right? Thanks a lot. Really appreciate Larry Tabb, Bloomberg Intelligence Head of Market Structure.
your company news headlines on Bloomberg Radio.
And I'm John Tucker in the newsroom with a look at some of the company stories we're following right now. Eli Lilly teaming up with Amazon.com to expand its new businesses selling weight loss drugs directly to patients. So you have surging demand for the magic medications, making them, getting them a hassle at times. In response, the pharma giant started Lilly Direct to make it easier so patients can connect with doctors online, and certain drugs can be delivered through digital pharmacies such as Amazon Pharmacy. Now, Lilly has suggested its platform could also help patients reduce their medical costs by ensuring that coupons and savings programs are applied. Unlike other pharmacies, Lilly can tell patients when the medications are expected to be in stock. Adidas, I'm not going to say that. Adidas.
Thank you.
Well, it's a family name, so it is pronounced Adidas technically, but even the company says Adidas in this country. They're sticking with their underwhelming earnings forecast for this year. They're working through high inventories of unsold sneakers. Well, the CEO, now in his second year at the helm, is trying to orchestrate another era of fast growth at Adidas and help close the gap with the industry leader Nike. Adidas' net sales fell last year, hurt by the canceled Yeezy partnership with the rapper and designer Yee. Is it Ye? No, it's Ye, I guess. Finally, Oscar news. The Oscars that nobody watched. Or at least I didn't. The Universal film Oppenheimer nabbed 7 Oscars, as you know. Christopher Nolan taking home 2 of those on Sunday night for director and producer. But according to Variety, his ultimate haul for the period was drama was much higher. His final payday for the film just south of $100 million. Yikes, we're in the wrong business. That's your company news.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, we made it through Wednesday. Well, we're like halfway through Wednesday. I'm Alex Steele here with Jen Ryan. Paul Sweeney is off today. We are live from the Interactive Broker Studio right here in New York City. Let's get over now to Michael Barr for world and national news.
Former President Donald Trump is no longer facing as many election interference charges in Georgia. Fulton County Judge Scott McAfee has dismissed 6 of the charges in District Attorney Fani Willis's indictment, including 3 for the former president. We get the details from Bloomberg's Wendy Benjaminson in Washington.
The charges that were dismissed were the charges involving that quote-unquote one of his many perfect phone calls, so quote-unquote, to the Secretary of State of Georgia, the administrator of the elections, who heard Trump say to him, I just need you to find me 11,000 votes. So that the charge was interfering with an elected official or solicitation of, bad acts. So those charges were dismissed.
Bloomberg's Wendy Benjaminson says, though, the racketeering charges at the center of Willis's indictment are still on the table. Judge McAfee says prosecutors can seek a new indictment on the charges he tossed aside today. The House has passed a bill that would lead to a nationwide ban of the popular video app TikTok if its China-based owner doesn't sell. Lawmakers are acting on concerns that the company's current ownership structure is a U.S. national security threat. The bill passed today by a vote of 352 to 65. Democratic Representative Nancy Pelosi spoke on the House floor before the vote.
This is not an attempt to ban TikTok. It's an attempt to make TikTok better. Tic-tac-toe. A winner. A winner.
The bill now goes to the Senate, where its prospects are unclear. President Vladimir Putin says that Russia is ready to use nuclear weapons if there is a threat to Russian statehood, sovereignty, or independence. Speaking with Russian state TV today, Putin said that he hoped that the U.S. would avoid any escalation that could trigger a nuclear war, but emphasized that Russia's nuclear forces are ready for it. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Alex, Jen, John?
All right, thank you so much, Michael Barr. So here's a great story that Jen pointed out to me, that as there is a ton of demand for the weight loss drugs like Ozempic and Wegovy, now guess what? They're counterfeits. This is quite interesting. This article is about, is he a detective? He's a law enforcement veteran. And he spent the last 4 decades trying to bring down drug gangs and child sexual abusers. And now he's looking to the fake weight loss drug market.
Yeah, it's fascinating. This is all happening out of the UK, and it's not even the regulator. This is, well, it's a healthcare regulator. This isn't a fraud office or anything like that. But what they're doing is seizing drugs at the border, seizing them in other places. And so this is the UK Medicines Agency. I love this statistic. They've seized 869 fake Ozempic pens, more than Denmark, Ireland, Switzerland, Iceland, and the Netherlands combined.
Whoa.
It's amazing. And what the crooks are doing, in some cases, is selling insulin pens, ripping off the insulin label, and putting on an Ozempic label. So you've got to look out.
This is really terrifying and scary.
Yeah, because if you take insulin, you obviously it's vital for you if you've got diabetes, but it can cause seizures or even death for the average person.
Wow. I mean, I guess, duh, right? Like, of course, it's a hot drug, so therefore, thus, there'll be counterfeits. But nonetheless, this did wind up surprising me a little bit. So how many fake pens do we know?
It's almost 900 that they've nabbed so far.
900. That's pretty incredible. It's akin with, like, falsified drugs, apparently, big business for criminals globally. Pharmaceutical crime is spiking by 50% between 2018 and 2022.
That has to be the response to the rise in medicine prices.
I mean, maybe. Yeah, I guess, right? So, but if you lower drug prices, will this really stop? I don't know. I mean, remember when people would go to other countries for facelifts or something, or
it's the same
implants?
It's the hot drug. Right? It's the hot drug, so let's get a fake one.
It's the hot drug. All right, Jem, thanks a lot. Super appreciate it. We'll see you tomorrow as well. Balance of Power is coming up next. This is Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Just don't you call it a ban. Welcome to the fastest show in politics as the House passes legislation that could lead to a ban of TikTok. Someone tell the teenagers. We'll talk about the implications and whether Donald Trump will actually let this happen. With Bloomberg's Dan Flatley, he'll join us live from Capitol Hill today. The rematch is set. Don't look now, but Donald Trump and Joe Biden both secured the delegates needed to become their party's presumptive nominees. And so it's on. We're going to talk today ahead of the longest general election campaign of our lives with Nancy Kaffer, editorial page writer and editor at the Detroit Free Press, and with our panel, Bloomberg Politics contributor Jeannie Shanzano is with us, and Lester Munson from BGR Group. So let's get going again, and we start, as always, on Wall Street. An update on trading now with Charlie Pellet. Hey, Charlie.
Hi, thank you very much, Joe Matthew. Little change right now on the S&P 500 index, lower, but down by about 0.1%. The Dow pushing higher. Could see a record there, 39,160 right now on the Dow Jones Industrial Average. The Dow higher by 0.4%. S&P lower by less than 0.1%. NASDAQ down 0.52, I should say, lower by 84 points, 16,180 right now on NASDAQ. 10-year yield 4.18% with a 2-year that's yielding 4.61%. Spot gold up 0.6%, 21.71 the ounce. West Texas Intermediate crude up 1.8%, 78.97 a barrel on WTI. Bitcoin 72,686 right now on Bitcoin, up by 2.3%. Bottom line here, stocks are retreating from records as a handful of big tech stocks fell, and traders await a $22 billion sale of long-term treasuries. Well, certainly lots of questions about market valuations. Mark Spellman is portfolio manager at Alpine Woods Capital Investors, and on Bloomberg Television, he told us we are now in a melt-up.
Take a look at the chart for NVIDIA. I think that's the textbook
That's it?
right now. Well, the last couple of days, you have a stock that's up basically 100%. In the last couple of days, it's up about $150. Terrific stock. There's no doubting it. They generate a lot of cash flow. They're doing this all with the cutting-edge technology. It's a name you want to own. We just don't think here at $900 it's a great buying opportunity. We look for a pullback.
Connection lost.
Indeed, today we're seeing a 3% drop. NVIDIA now at $8.92. And by the way, you can hear more of that conversation on the Tape podcast. You can download it wherever you get your podcasts. Again, recapping stocks are trading mixed. The Dow higher, S&P, NASDAQ, they're both lower. 6-point drop in the S&P 500 index, now lower by 0.1%. Balance of power continues. Back we go to Washington once again. Here's your host, Joe Matthew.
Charlie Pellet, thank you. Welcome to the Wednesday edition of Balance of Power. We're halfway through the week together as we join you live from the nation's capital where something big just happened. Did you feel it? The ground shook a little bit. The House passed something. And passed it by a lot. 352 to 65. A new funding measure, you ask, a new budget for our country to keep the lights on past March. Maybe money for Ukraine, the billions they've been waiting for. No, I answer to all of them. This is legislation that could lead to a ban of TikTok. Now, boy, don't call it an outright ban. You'll hear from lawmakers on that. Remember, we talked about it. This is the mechanism that would force ByteDance to divest TikTok in a certain period of time. They give them 6 months or be banned. Don't ask me who will buy it. Don't ask me what Donald Trump's going to say, or the Senate for that matter. This sailed through the House. This has been moving quickly. The statement from Chuck Schumer next door, where people think maybe this might actually not be able to pass. Quote, the Senate will review the legislation when it comes over from the House. Unquote. The reaction from China, what you'd expect, resorting to hegemonic moves. As we hear from Beijing in recent years, this is from a spokesman for China's foreign ministry. In recent years, though the U.S. has never found any evidence of TikTok posing a threat to U.S. national security, it has never stopped going after TikTok. And will they complete the ban? Remember, there's a ban of federal employees using it on government phones. The Biden administration, or the campaign rather, is also on TikTok, and so is the Trump campaign. So maybe we're talking out of both sides of our mouths here in Washington. That would never happen, of course. Dan Flatley is with us from Capitol Hill, Bloomberg national security reporter, because, Dan, it's great to see you. This was done in the name of national security, right? They didn't want China collecting data on Americans. Is this going to pass in the Senate?
Yeah, Joe, absolutely. I mean, this was all done in the name of national security, as you said. And you mentioned that the path forward in the Senate is much less clear than, what we just saw happen in the House, a big bipartisan vote. 352 votes in favor, 65 against. It's not very often that you see a bipartisan vote like that these days. But you mentioned Senator Chuck Schumer's statement. Perhaps, giving some hope to those who want to see this bill pass the Senate is the statement from Senators Mark Warner and Marco Rubio, the chair and vice chair of the Senate Intel Committee. They said that they were happy to see the House pass this bill, want to see something similar done in the Senate. They want to work to get this House passed bill through here. The problem is that, that's 2 senators out of 100. They do have a lot of influence, but the Senate, will probably work its own will on this. And as you know, Joe, any one senator can really gum up the works. So it's going to be a little bit of a different process over here.
Yeah, I'm taken by the statement, Dan, by Maxwell Frost to give us a sense where progressives are on this. He's taking this as a First Amendment issue, writing, quote, this legislation is an infringement on our constitutional right to freedom of speech that also places a nearly impossible condition for the app to be sold within 6 months or less. He says it is unrealistic, unquote. Is there something to be said for that? Is that First Amendment argument going to be heard in the Senate?
It's possible. I mean, certainly that's something that Kentucky Senator Rand Paul intends to raise. He's said that already. You mentioned a couple of other issues there, Joe, which is the question of, is this enough time for ByteDance to find a buyer for TikTok? Right. It's a very valuable company at this point, much more valuable than it was a few years ago when then President Donald Trump tried to ban it through a similar mechanism in the executive branch. 6 months is a very short time frame. Actually, it's a little bit shorter than that. It's about 5.5 months technically. But if you look around, there's no buyer that has come forward yet. Maybe they're trying to keep their powder dry in that sense. but it would be very expensive, obviously. The other thing that you hear is that this just happened too quickly in the House. Alexandria Ocasio-Cortez earlier, when she announced that she would be voting against this, mentioned the fact that this just happened too quickly. Maxwell Frost also mentioned the fact that this happened too quickly, and that while they have concerns about data leakage to China and other things of that nature, this bill would not address those concerns in a workable way. So that's kind of what you hear from the opponents of this bill right now.
Yeah. Dan, great. Thank you for being up there for us today. Bloomberg's national security reporter, Dan Flatley, with us live from Capitol Hill, where it all just went down. The bill has passed that could lead to the ban of TikTok. Alexandria Ocasio-Cortez, just mentioned by Dan, issues a tweet. I'm sorry. Susie hit me off of the door and said, you gotta start calling it X. It's not Twitter anymore. I'm still calling it Twitter. I'm voting no, she writes, on the TikTok forced sale bill. The bill was incredibly rushed from committee to vote in 4 days with little explanation. That is pretty remarkable in Washington. She goes on to write, there are serious antitrust and privacy questions here, and any national security concerns should be laid out to the public prior to a vote. Maybe that national argument has yet to be made. I'm Joe Matthew in Washington. Glad you're with us here. Our other big story brings us to the campaign trail. It's on, the rematch. I know we all felt smart on Super Tuesday and looked at what was impossible math for Nikki Haley, certainly anyone else running against Joe Biden in terms of Dean Phillips. But when you actually reach that level and you can call them presumptive nominees, it's meaningful. And we got there last night. As we discussed, of course, it was a primary day. We talked about Georgia. And pretty interesting to look at the results here, as Joe Biden's victory in Georgia put him over the top, but he still showed some weakness here in the polls coming out of these contests. Donald Trump has his own challenges as well. Again, in the state of Georgia, Joe Biden's problem might be in the Midwest, as we've discussed, Michigan, Minnesota, the uncommitted movement, the protest vote that has been following him across the country. But this is going to be the nation's first presidential rematch in 70 years. We are actually doing this. The longest campaign in modern history and the first rematch in 70 years. As we dig into this with Nancy Kaffer, a new voice on the program. I've been looking forward to talking with you, Nancy, editor of the Detroit Free Press editorial page. It's great to have you with us. Joe Biden's got some weaknesses. A lot of them have been discussed openly, certainly around the State of the Union address. It was all about his age, but his policies are bringing challenges for young progressives and voters of color. What's your view from Detroit, where Michigan is everything?
Thank you so much. It's really a pleasure to be here. Yeah, I think that there were some really alarming results in Michigan's primary outcome, and I think you're seeing those uncommitted voters spread to other states. You're seeing this movement spread. We're talking about a state where Donald Trump won by 10,000 votes in 2016, and Joe Biden won by 150,000 votes in 2020. These are really thin margins, particularly 2016, and there were 100,000 uncommitted voters in Michigan after a 3-week campaign to get this up and running. So this is Biden has been around. He's done this before. He's I'm sure concerned and is trying to figure out what he can do to turn these voters back to his cause.
He's got union workers to worry about as well. He's walking the picket line as the first president to carry a sign with the UAW just months ago. And all I keep hearing, Nancy, is that the rank and file UAW are going to vote Trump. When you add these two together, knowing the razor thin margin we're talking about here, this is a potential problem. He's losing Michigan in Bloomberg's swing state poll. Does that accurately reflect the lay of the land there?
I think it's really hard to tell. I mean, yes, he's been consistently polling poorly here since last year. And, it's certainly cause for alarm. I think we are still several months out from the election. Inflation is going in a different direction. It's hard I know we're getting closer to the election, but it still is, we still got a lot of time for things to go differently. We've got a lot of time for folks to realize that walking into the polls, that it's a binary choice, that it's Joe Biden or Donald Trump, that there's not a sort of third fantasy candidate that they can select. But yeah, if I were the Biden camp, I'd be worried. I'd be trying to do what I could to get Michigan back into my column, because there is no, if you look at that electoral map, I don't see a path for victory for him except for through the Midwest. Do you?
That is absolutely right, which is why we keep talking about it. I mean, it's just without Michigan, without Wisconsin. Ask Hillary Clinton how that's going to go. Here's a doozy, Nancy, and I can't figure it out. We can talk about economic polling all day long, and you can point me to inflation and higher prices, and I get it. But for Joe Biden to see no post-State of the Union bump in the polls, to me, is a screamer here. This was lauded as the speech of his lifetime last week. Even Republicans said, yeah, boy, he cleared the bar. He was yelling at us from the rostrum. We're not going to be talking about cognitive challenges here in the near term. But if you look at 538, yesterday's updated approval rating average is a new all-time low. What do you think about that?
I mean, I don't know. I mean, he's in trouble. I don't know how many. It's becoming clear with every poll. Like he has got to really campaign the hell out of these states. I mean, you know, in Hillary, can I say that? Can I say?
Yeah, you just did.
Okay, sorry. In print newspapers, we have a little more time to self-edit. I'm sorry.
Hey, I work in a newsroom. It's all good, Nancy.
So, you know, in 2016, Hillary Clinton sort of famously didn't campaign in Michigan for 9 months, and that did not go well. I mean, similar issues in Wisconsin and Pennsylvania. And again, we saw how that turned out. Those three states have voted in lockstep for, I want to say, at least 20 years, maybe more. So I think it's going to be also interesting to see, do these states split off this time? Is it, you know, as goes Wisconsin, so goes our nation? Like how does, I mean, of the Midwest, like how does this all play out here? But yeah, he's got to get here. He's got to win these voters back, or he's in big trouble. I mean, 100,000 voters it's a lot. It's a lot of people, and especially considering, again, the short period of time in which this uncommitted campaign got up and running. Now, typically, you see about 20,000 people vote uncommitted in every presidential primary. I'm kind of curious about that. I didn't really realize it was such a phenomenon until this year when this campaign started. But yeah, you get about 20,000 people in every primary who choose uncommitted, except for some weird years where weird things happened in primaries. Like in 2008, when Obama wasn't on the primary ballot here, like 300,000 people voted uncommitted as a proxy for Obama. But yeah, so 80 to 100,000 people here dissatisfied enough with Joe Biden's presidency to go out and make that choice. We also, you know, this was centered around Gaza, and we have the largest Arab American community in the country in Detroit. But our precinct level analysis after the primary showed that this wasn't contained to the more densely Arab American communities in Metro Detroit. That this was, you know, a problem at University of Michigan for Biden, or, you know, in East Lansing at Michigan State University. That these university communities with young progressives, not simply Arab American voters, which is, you know, as I think someone smarter than me said, not a lot of states have a high Arab American population, but most states have liberal college towns filled with young progressives. So sort of a more spreading problem.
Well, you really put your finger on something there, Nancy. In our last moment, speak to that, because we're not including issues that could be dogging Joe Biden that are economic related when it comes to young people. The promise of student loan forgiveness, the promise of legalizing cannabis, things that they heard on the way in that have not happened yet. That's part of the problem here, isn't it?
It is, but the other thing is he has moved a lot of domestic policy, and he's got to get better at talking about it and better at convincing people that it's made a difference in their lives. We're in a weird world where people don't always evaluate the facts on the ground. How do we feel about the facts on the ground? How do we feel about things that have happened? Is a competing factor, but also telling people like, no, you're wrong, things went well for you isn't a winning strategy either. So I think he's got an incredibly difficult job to do, but he does need to start talking more and more convincingly about the things he has actually done for Americans if he wants to turn that tide.
Well, I'm glad you could come talk to us today, Nancy. Don't be a stranger. We'd like to stay in touch with you over the course of this campaign with The View from Detroit and from Michigan, where she is editor of the Detroit Free Press editorial page, one of the nation's great newspapers. Nancy Kaffer, thank you for your insights as we get things rolling on a Wednesday, and a lot more to follow from Washington as we bring in Wendy Benjaminson with a presumptive race, a rematch in this case, set to go. And TikTok on its way to being banned in Washington. This is Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow trading higher and also at a record right now. Best level of the day, up 176 on the Dow Industrials, up 30 at 39,183, up by about 0.5%. S&P lower by 4, little change, down less than 0.1%. We've got NASDAQ down 81, a decline there of 0.5%. 10-year 4.18% with a 2-year 4.61%. Spot gold up $14 the ounce to $21.72, up by about 0.7%. And crude up 2.2%, $79.30 a barrel on WTI West Texas Intermediate crude. Bitcoin up 2.3%, 72,717 on Bitcoin. So a mixed market right now with the Dow pushing higher. Best level of the day right now. We've got the S&P down 4, down 0.1%. Tesla is retreating by 3.1%. Wall Street stance on Tesla worsened further today as yet another analyst warned about risks to sales and said its strategy of cutting prices to boost demand is losing its effectiveness. Wells Fargo analyst Colin Langan calls Tesla, quote, a growth company with no growth. Tesla down 3.1%. Again, recapping, S&P down 4, down 0.1%. Balance of power continues. And once again, here's your host, Joe Matthew.
All right, Charlie Pellet, thank you. Thanks for being with us on the radio, on the satellite, and on YouTube, where you can find us here on Bloomberg Live. We've got the cameras lit in the studio, and we welcome you. Go to YouTube, search Bloomberg Global News. You'll find our live feed there. Not just this show, all the shows, all day. It's pretty cool. A great way to connect here at Bloomberg. As I wonder if Jesse Ventura is the one who will rock our world in this campaign. Jesse the Body ain't got time to bleed. As I read this morning, the former Minnesota governor is on a list of two, a short list of two, for RFK Jr. as he tries to assemble some sort of a ticket. I don't know what states they'll be on the ballot, but this is going to be fun to watch. If it's not Jesse Ventura, of course, from Predator fame, beyond professional wrestling, it's NFL quarterback Aaron Rodgers. So we could just suck up the whole anti-vax vote in one ticket? Maybe that would actually take votes away from Donald Trump. Trying to figure it out with the help of Wendy Benjaminson. She didn't know she'd be talking about this. She's at World Headquarters in New York. And we got a whole campaign on our hands here, Wendy. Thank God you're with us to pull me in from the ledge. Before we move on here to the real news, which is a real race. We actually have a real race to talk about. Are we doing enough to acknowledge the impact of RFK Jr.? And is this Veep selection going to matter?
Well, the Veep selection is certainly a great marketing move. RFK Jr. has been not in the news for a while, and all of a sudden, there he is, with these interesting picks. I mean, at least Jesse Ventura was the governor of a state, right? I mean,
correct.
Aaron Rodgers has, as far as I can tell, no political experience, but joins RFK in the anti-vax. And the fact, actually, that he chose these two people who oppose the idea of required vaccinations for COVID and other diseases, that sort of cements RFK, who comes from a Democratic political dynasty, in the leaning more conservative libertarian sort of category. So while early polls showed him pulling equally from both, because Democrats like the name Kennedy and other Republicans like the idea of anti-vaxxing, now he might actually pull more from Donald Trump. But, that depends on if he's, as you said, how many ballots he's on and all of that.
Keep your eyes on Truth Social. When he starts beating up RFK Jr., you'll have an answer to Wendy's question here. Of course, Jesse Ventura still couldn't beat the Predator. And we do have a rematch with two titans here. We could argue, Wendy, I keep hearing the majority of Americans doesn't want either of them to run.
That's right.
But they both became presumptive nominees last night, Joe Biden and Donald Trump. What does now the length of this campaign that so many of us are looking at and crying over, to be honest, what is that going to mean for strategy, for funding? How do they hold out for so long?
Well, I think we've seen the kickoff of the Biden campaign really started with that State of the Union, which, as we were talking about earlier today, I mean, he got a big fundraising bump from that because, he performed it well and all of that. Apparently, it didn't do much in the polls, and that could be because not a lot of voters actually watched the State of the Union. But Biden has kicked off his general campaign, and he's got the money to do it, and he's raising more every time we turn around. So his campaign can maintain this level of high level of advertising, of travel, of all of that, right up until November. For Donald Trump, it's an interesting perspective. On the other hand, how much does Donald Trump really need to campaign? I mean, he does, of course, but by now we all know Donald Trump. We all know how we feel about Donald Trump. And, whether he actually has to go to every swing state and hold a rally, he can afford to do that. The question will be the advertising.
We just spent a good chunk of time, Wendy, talking with the editorial page editor at the Detroit Free Press about Joe Biden's weaknesses in a state like Michigan. Donald Trump showing some weaknesses last night in a state called Georgia. Remembering, he lost Georgia by 11,779 votes. Yesterday, Nikki Haley got more than 77,000 votes. And I realized that a lot of folks started early voting. That's what you're going to hear and read, and that's accurate, before she dropped out of the race. But is this a Georgia thing or something that Donald Trump needs to worry about?
Well, it'll be interesting if there were 11,779 people who voted on Tuesday in Georgia. But, there is still, as we've been saying, a chunk of the Republican electorate who does not want to see Donald Trump elected president. And so or at least even nominated. So the question is, where do those people go in the general election? Do they hold their nose and vote for Trump? Or do they switch over? Or do they vote for RFK Jr., and Aaron Rodgers to be vice president? So it's kind of hard to tell where the Nikki Haley votes are going, and pollsters all over the country, including ours, are looking at that question now.
We're hearing from Joe Biden now. Over the weekend, he was asked about debates. I haven't had a chance to talk to you about this, Wendy. Donald Trump just became the Republican presumptive nominee by boycotting every single primary debate. He was above it, and it worked. Should Joe Biden boycott the general election debates?
Oh, I don't think so. I don't think Joe Biden should. If I were Donald Trump.
He said it depends on how Donald Trump behaves, and Donald Trump is not going to behave well for the next 8 months, Wendy.
No, he is not going to behave well, and I'm not really sure what the president meant by that. But the president, the current president is a good debater. He loves, as we saw in the State of the Union, to spar with Republicans. He enjoys it, and so he's good at it. He would probably do pretty well in a debate. Donald Trump has that sort of Donald Trump demeanor, and he'll say all of his great applause lines. He doesn't always have that wonky handle of details on policy nuances that Joe Biden does. And Joe Biden could probably do pretty well in the debate. If I were Donald Trump, though, I'm not sure I would volunteer for that debate.
How about that? Is Donald Trump going to kill this TikTok thing? Everybody's jumping around because the House passed a bill, and they passed it by a wide margin, as we expected. Needed a 2/3 majority. They got way more than that, Wendy. But it's looking a little more tepid in the Senate, a little more reluctance, and Donald Trump is starting to waver. He's gone on quite a journey here when it comes to the matter of TikTok. From a full-on ban at one point he wanted to now he doesn't want to empower Mark Zuckerberg at Facebook. Right. Is this going to crash into a wall next?
I don't know, because when he killed the border bill, this bipartisan compromise bill that came out of the Senate, it was going to pass the House, and then Donald Trump made a bunch of phone calls, and it's because he wanted to keep the border issue alive for the campaign, and the bill died. In this case, the House voted overwhelmingly bipartisan to force ByteDance to sell TikTok to an American company or risk being banned. And Donald Trump said a couple of one-off things about it, that he thought the young people would go crazy. He thought it would, advantage Mark Zuckerberg, which, on his retribution theme, he doesn't want to see happen. But he didn't really put his shoulder to the wheel on that one, like he had with the border bill, and so the House voted to do it. The reluctance in the Senate is sort of starting with Chuck Schumer. I mean, the statement he put out afterwards was, well, we'll take a look at it when the House sends it over.
Why send a statement when that's all you have to say?
It
reads, the Senate will review the legislation when it comes over from the House. Chuck Schumer never had problems talking about stuff, Wendy. Is that an indicator? Is that all we need to know?
Yeah, I think that was a pretty clear ice cold reception that the bill is getting in the Senate. I think there are some, I think members are holding some legitimate First Amendment concerns that and who the company would sell to. There would be antitrust problems if Elon Musk bought it or Zuckerberg bought it or people like that. So who would buy it? And then if it is banned in the US because ByteDance can't sell it, then the kids will be upset. And Biden and the Democrats really need the youth vote now. They're in trouble with young voters over student loans, over Biden's commitment to Israel, over other things. And so if he takes away their TikTok, that might not do well. So that could be where the coolness in the Senate is coming from.
Yeah. Maybe he just wanted to get his position stated, say something bad about Facebook, cover yourself. It's a CYA statement and you move on here. Let the Congress do what it's going to do.
Although
Maybe he also knows that this doesn't stand a chance in the Senate.
Although also because we're all talking about how Donald Trump didn't influence the House vote successfully, what Donald Trump does? He gets mad because it looks like he's not a quote-unquote strong leader, and he may then put his shoulder to the wheel and kill it in the Senate.
Kill this thing in the Senate. Amazing. Wendy Benjaminson, it's great to see you up there on the fishbowl. I'll catch you on this end of the Amtrak corridor when you get back to Washington. She is Bloomberg's Washington senior editor with us here, as always, at this time every week on Balance of Power. We'll assemble the panel next. We got a good one for you today. Jeannie is with us, of course, Jeannie Shanzano and Lester Munson, as we explore both sides of what's happening in Washington and on the campaign trail on the Wednesday edition of Balance of Power. Let's bring you up to date on world and national news now. For that, we turn to Amy Morris in the Bloomberg 99.1 newsroom in Washington. Hi, Amy.
Hi, Joe. Congress has voted to pass a bill that could lead to a ban on TikTok in the U.S. You have just been talking about this. This legislation would prohibit the app unless its parent company, Chinese company ByteDance, divests within 6 months. On the floor, Republican Marjorie Taylor Greene of Georgia spoke out against the bill. She calls it a Pandora's box.
What's to stop Congress or the United States government in the future from forcing the sale of another social media company, claiming that it's protecting Americans' data from foreign adversaries?
China condemned lawmakers' push to force the sale of TikTok and says it will use every legal tool to fight back. The judge overseeing the Georgia election interference case has dismissed some of the charges against former President Trump. Others remain. Fulton County Superior Court Judge Scott McAfee ordered 6 of the charges in the indictment be quashed, including 3 against Trump. The order leaves intact many other charges in the indictment, and the judge wrote that prosecutors could seek a new indictment on the charges that he dismissed. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.